Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, welcome everyone. Good morning. Thanks guys for joining Stocks Number Trading. My name is Ron. My partner is Dave. Thank you guys. It is a Thursday morning, 6 a.m. Eastern, and today is September 11th. So thanks everyone for joining. We do have some U.S. high impact news today at 8:30 a.m. Eastern. It's yesterday we had our PPI, our Producer Price Index. And today is CPI, our Consumer Price Index. We'll educate a little bit. We'll talk about what it is. We have a blog prepared. But we got a busy day today, guys. So I hope everyone got some sleep and is got some energy today. Hope you guys got some hot coffee. And we're ready to go. Today we're going to go over today's news, okay? Just we'll go over everything like we normally do. Forex Factory. We'll talk about some earnings today. Then we'll get into start our CPI analysis, and then we'll start to analyze the charts where we'll go to gold, XAUUSD, and we also, if you see on my charts right now, I have a split screen with GC1 exclamation mark. That's the futures, and we'll also do side by side where I'll do a top-down analysis on both of them. And whether you're trading the futures chart or you're trading the spot chart, pick your chart, trade your candles, and they move similar but not exactly the same. Okay, so just to make that clear to everybody, they do have different numbers. Like if you look right now, spot is trading at 3,620 and futures is trading at 3,660. So you can see there's a $40 discrepancy. But again, you trade what you are trading, okay? So if you're trading futures, you stick with the futures chart. If you're trading spot, you stick with the spot chart, okay? But I will analyze both of them. I will figure out where the support areas are, resistance areas. We'll do a top-down analysis. We'll find our zones on both of the charts, and just please trade accordingly. And then when we move off of gold, we're going to move over to US30, Dow Jones, and NASDAQ. And if we get used to this type of approach, then what we'll do is when we bring US30 up on another day, we can bring up YM as well. So we can show how spot trades and futures, and similar with NASDAQ, we can do NAS100 and NQ, okay? So we can give to everyone, whoever's trading Forex, whoever's trading futures, and just see how we can do with it. Today we'll trial it with gold. We'll get your feedback after the call. Maybe tomorrow we'll do it again. And then I appreciate your feedback. Some of you guys will say, Ron, don't worry about it. Let's just continue with the spot. Or, but you know, let's just try it out. This is the first time we've done this. So again, feedback is appreciated. Okay. And okay, welcome everyone. Thank you guys already 135 viewers on YouTube. Thank you guys. If you guys can kindly leave us a like and hit the subscribe button, we do appreciate it to get things started. I'm going to get started right now, so we'll get to the charts. If everyone can just be patient for a few minutes, we'll get to the charts. I know it's exciting, everyone wants to trade, but we still got to analyze the markets and do our daily routine. Okay, so let's start off with Forex Factory right now. And just talk about today's news. So you can see there was no news coming out of Europe. Europe is normally 2 a.m., 3 a.m., 4 a.m. Eastern. That's when the European markets open up. We didn't have anything coming out of there. We do have 8:15 Eurozone news. We have very, very high impact. If you're trading the euro or the pound or any European currency over here. You have basically, it's the European FOMC over here. It's with the main refinancing rate. You can see the previous month was 2.15% in Europe, and they're forecasting no change at 2.15. So it's going to be very interesting. Maybe we'll see a rate decrease over here in the actual, maybe like a 0.25% decrease. Or it will just be a pause. You'll see a 2.15. However, they could increase. I don't think that they will increase. Odds are a pause or a possible decrease. Same with what US might do next week with their FOMC. And then there's a monetary policy statement, just like we have with FOMC. And then 30 minutes later at 8:45 a.m. Eastern, the Eurozone has the ECB press conference. So that's the European Central Bank. We'll talk just like how Powell comes to the conference, answers questions, gives forward guidance as to why maybe they decided to pause, decrease, or increase the interest rates, then answer questions, okay? And you can see that they are very red folders, so they are high impact. So again, if you're trading any currency to do with the pound, euro, this will affect that, and there will be volatility. So please, guys, if you are trading those specific currencies or you're trading any security coming out of Europe, please use proper risk management, okay? This will be volatile. And then we have that's at 8:15. 8:20, we have COMEX market open. So yeah, most of us trade gold at that time. We'll be charting gold. We'll have our top down on spot gold and COMEX futures gold. So then the COMEX market will open up, and that brings in volume and volatility into the markets as well. Then 10 minutes later, we have US high impact news. Okay, so yesterday, very similar, we had PPI, that's the producer price index. Numbers came in negative, came in lower than expected. Dollar sold off, gold moved up. Why did the producers go down? It could be due to tariffs now starting to get calculated into the markets, and tariffs are a main contributor of those numbers yesterday. But now we're going to see how everything affects you and I, the consumer. So we have to purchase from the producer. So this is a good gauge of inflation, what Powell might do next week with the interest rates. So we have our USD core CPI month over month. Remember, core, when you see that word core, it's got to mean something. So it's a change in price of goods and services purchased by us, consumers. And then when you see the word core, highlight this, it excludes food and energy. Okay, so this is the data that will come out for the price of goods and services purchased by consumers, but it excludes food and energy. Okay, so you can see from last month, again, it was 0.3, and they're forecasting no change in the forecast. It was 0.3 yesterday for the PPI, and remember, it came out negative 0.1. So we'll see now how it affects the consumers today, and core excluding food and energy. Then we get another reading. You see CPI month over month. It's basically the same thing, but it doesn't include the word core. So this one includes food and energy. So this will be another reading, but this one includes food and energy. And then I'll talk about why food and energy is very important. It could skew the numbers, so that's why they have two of these readings. And last month, the CPI was 0.2%, and they're forecasting an increase to 0.3. Again, we will see the actual number coming out here. Then finally, there's another big one, CPI year over year. So you can see last year we were at 2.7%. So they're forecasting an increase year over year at 2.9%. Okay, so if this comes out above 2.9, like 3.0 or higher, it's not good. That's not good, because year over year consumer price is going up. We want it to go down, right? So we will see what this number is. This is just monthly. So the first two are from the previous month, month over month, and then the third reading right here, the big one, is year over year. Okay, so you can see there's 1, 2, 3 high impact folders with CPI, so you can imagine it's going to be volatile. So right now you should be thinking of a trading plan going into 8:30 with whatever security you're trading. If you're trading currency, if you're trading commodity, if you're trading index, whatever it is, make sure you have a little bit of a plan. How much are you going to allocate? How much are you going to trade? Are you even going to trade during this news? Are you going to wait after the news is released? Okay, so let's everyone come up with a sound plan, and whatever plan you use, always use proper risk management. Doesn't matter if there is high impact news or if there isn't, you should always use proper risk when you're trading, okay? This is not a casino. This is a business for most of us, okay? So trade smart. And then finally, we have another red folder, our unemployment claims. This is our week over week unemployment claims. So last week, you remember the numbers came in above. So it was red, this 237,000. So it was telling us that week over week in the US, unemployment is increasing. More individuals are applying for unemployment benefits. They're seeking work. And when the job numbers came out, they're not producing any jobs. The jobs were actually very low. So put the pieces of the puzzle together. When you're not creating jobs, when you're losing jobs, and you have higher unemployment and more individuals seeking employment, that could signal like a recession could be coming, right? So it's not the greatest to have those kind of correlations. And the forecast will be 235,000. So they're suggesting 2,000 decrease from last week. We'll see if this number comes in higher than 235, higher than 237, might be 240, 245, 250. And then that's suggesting, again, that more individuals in the US from last week to this week are seeking employment and are out of work. Okay, so we got to see everything, how it all comes in, and we might get mixed numbers. You might see some are green, some are red, some are green, some are red, and then that would provide for more volatility. As well, some of these hold more weight than the other ones. So the unemployment claims week over week are important, but they're not as important as maybe CPI year over year. Okay, because that's a whole year reading. This one is just following from last week, right? But all of these together are high impact. You can see we got 1, 2, 3, 4, 5, 6, 7 red folders from the span from 8:15 to 8:30. Okay, so let's be careful in this time, okay? And then after we get through that, we're gonna switch over, and then we're gonna do some analysis on NASDAQ and US30, and then we're gonna start walking into New York Wall Street, okay? And that's at 9:30 a.m. Eastern. We don't have any news at 9:30, 10 a.m. Then news comes in after our call at 10:30. Yesterday we had crude oil inventories at this time. Today we have natural gas storage. Another thing to mention, yesterday in the afternoon at 1 p.m., 1:01 to be exact, we had the 10-year bond auction in the US, and today it's the 30-year bond auction. So you can see right here the previous is at 4.81. We kind of don't want to see the 30-year getting a 5% or above, okay? Because that's not good for global trade. If the bond auction, the 30-year treasuries are going above 5, okay? Because it's not that great, okay? So that we got to watch that as well this afternoon if you are watching. And then after that, we're going into the market close, power hour, after hours, close 4 p.m. Then you go into transition, going into daily candles closing, opening back up, and then your futures market starts at 8 p.m. Then the Tokyo Asian session and your Australia, New Zealand over here, okay? So are we clear on that, guys? Thumbs up in the chat. Hit the like button if you understand today could be a very high impact, volatile day. It's a Thursday right before the end of the week, so let's use proper risk management, okay? Let's not blow up accounts today. Let's try and stop doing that, okay? Hopefully some of you guys are done with that. You're not blowing up accounts anymore. You're actually trading now, okay? So that's our news today. Earnings, let's just go over earnings real quick. Pre-market earnings, we have Kroger, coming out at 8 a.m. Eastern. We have Lovesac Company, CalVista, Hooker Furniture, Vera Bradley, and Cheetah Mobile. I don't think any of these are really going to highly impact the S&P 500, NASDAQ, or Dow Jones. Maybe Kroger could give us a little bit of analysis on consumer spending. Like Kroger is a grocery store in the United States, if I'm correct. So we'll see how spending is over there, okay? And then after hours earnings, again, is there any big names? Adobe is a pretty big name, okay? So Adobe is at 405, right over here, Adobe Inc. We have RH, RF Industries, Farmer Brothers Company, Frequency Electronics. So bigger name in the after hours out of all of these is Adobe, okay? So if you are trading Adobe specific company, maybe you bought some shares in it, maybe you're trading the option chain, maybe you're in a put, maybe you're in a call, maybe you're in a put, it's going to be very volatile for the company Adobe at after hours, okay? I don't think it will have big impact on the markets, but Adobe specifically, yes, okay? And just moving day-to-day news. So today, the high stakes CPI inflation report is on deck at 8:30, what we just talked about, what to watch for. So eyes are on the impact on prices from tariffs as the Fed's September interest rate decision looms. So we have FOMC next week. So these tariffs now have been ongoing for multiple months now. And so now we're going to start to see the results for these when they actually come in. So you can click on this article. You can read a little bit more about CPI inflation. And you can read these things early in the morning if you get up early while you're drinking your coffee prior to getting to the charts. Read your daily news, and it could help you understand what could happen in the markets while you're trading. US stock futures hit pause and wait for today's CPI data. So maybe we got to pause our trading and wait for the numbers to be released. Again, maybe we'll take a trade prior. And, you know, like yesterday, I was in prior in a gold buy. I was in that trade for almost 45 minutes prior to the news. When right before the news, I set my hard stop loss. The news correlated with my long idea, and it went into profit directly right into that resistance box at 55 pips. And but I was in a trade prior holding it. So it's not like I took that trade 1 minute right before the news. So again, I don't know what will happen today, but my objective is to try and not trade until the news. But if I get in a trade 30, 45 minutes earlier, you know, and I'm still in it, that's welcome to the world of trading. So you just got to set a stop loss and then go through the news, okay? It's not easy to trade that when you're in a trade because it gets very volatile, okay? Mexico hikes China auto tariff to 50% in bid to appease Trump. Americans don't buy Trump's message on inflation. Oracle yesterday had earnings, right? And man, wow. Like if we look at Oracle, they are up 40 to 50% off of their earnings. So Oracle's truly awesome quarter crowns it as major AI player. This guy right here, how Oracle's Larry Ellison rode AI tsunami. So he is now the richest person in the world, I believe now, overtaking Elon Musk. Larry Ellison over here. So look at, like, Oracle's up already 36% in the after hours. If we click on Oracle and just look at this thing, it's right over here on the top gainers. Oracle, right over here. Like, if we go last 5 days, you can see it's up. It was trading over here prior to the earnings, like at $240 a share, and now it's trading at $330 a share. Yeah, it is pretty overbought right now. Maybe we got to wait for a dip, but congratulations to those longs on Oracle. Wow, what a payday. In the last 5 days, it is up, look, 47%. Basically right off of that pump right there. There it is, the close of the day, and then there's the earnings. And Oracle rode AI and had exceptional earnings. Like Oracle's truly awesome quarter stuns Wall Street, sending stock up 36%, up right at 47%. So Oracle stock soars on AI fueled quarter. GameStop also had big games. So Oracle marches toward the $1 trillion club. Unbelievable. So big news on Oracle if you guys were trading that. But, you know, so these companies that are now using AI, you know, you're starting to see like the gains that they're getting off of these. So that's Oracle, guys. I wouldn't, again, suggest buying the highest points, right? You don't need to FOMO trade. You can wait patiently if you want to trade that for a pullback, okay? When it comes, it'll come. Whether it comes tomorrow or next week or next month, eventually that will settle down, and then you can trade it if you like. Okay, so just finishing off with the news over here. Let's see what we got here. So in the futures market right now, S&P is 0.13% right now. Dow is flat, 0.05. Nasdaq just 0.2 right now. So a lot is waiting for the CPI data that we have coming in the next 2 hours. Okay, so we have a lot of time for that to prepare. That's our news. Again, guys, read this while you're having your coffee every morning, and start to see. Learn all about the markets. Okay, so we do have a free Telegram channel pinned at the top of YouTube. If you're not joined it right now, if you guys can click on it, this is the free Telegram, what I'm showing right here. You have our live links and upcoming links for all of our YouTube channels to get you guys prepared for our lives. This is the free blogs. I'm going to go over this one. This is today, CPI index. We did PPI yesterday. So this is our consumer price index. We'll learn a little bit about it. This is Vitaly. You guys probably know him from Ethereum. He is a weird dude, but man, if you're an Ethereum shareholder, you're probably loving this guy. We sent out a crypto signal the other day, so our Ethereum long hit 150 pips on a swing trade. So there it is. You can see the before and after and a little news analysis and the chart. And this man is very happy right now. And guys, again, thank you to everyone who's in the comments and chatting on YouTube. We do appreciate you guys. Thank you guys so much. And there's the blog from yesterday, learning about PPI, Producer Price Index, and everything else we do here at SST. Here's some promotions. We do have the giveaway. So congratulations to these 10 lucky winners. Sorry I cut off. There was a few more here. But Lucas, Mike, Ghost Boogie, Sani Steph, On Fleek, 25FX, Justin, TPG. We're going to do our open, high, low, close night session later tonight. So congratulations to you guys. We'll do more of these giveaways. All these guys did was, follow us on our social media, on our Instagram, and tag a couple buddies and subscribe to our YouTube channel. And so we want to give back to everybody. Okay, guys? So if you join this Telegram channel, you might be part of those giveaways, promos, all of the stuff we do here at SST. Okay? And then on our website, guys, if you need education, we have a lot of education here. We're going to start ramping it up now. Everyone's going back to school now. We're going to be going back to school too at SST. Our summer is over. So we're going to get back into our regular Wednesday webinars. We're going to do our courses. We're going to get back in doing boot camps. Guys, our lifetimers, we're going to continue Sunday mornings. We're going to get started with those again. So we're going to be doing a lot of stuff back in school over here. So I like to call it the SST Trading Academy. Over here. So we're going to go back to school now. And if you guys want that free blog, it's available over here. Click on more blog, and there's today what we're going to just talk about, consumer price index. There was yesterday's PPI. We learned a little bit about BRICS. This is for the members getting their weekly forecasts, learning about, guys, feeler trades, what they are, why it's not the greatest to be trading on a U.S. bank holiday. Today also is our U.S. unemployment claims week over week. There's the blog regarding that, and all of the blogs available for everybody here. Okay, so Dash, can you please stop spamming the chat, okay? Sorry, I'm going to have to get rid of you here. We don't need it 14 times. Just sorry, guys, I apologize to YouTube, but this is what happens when you're spamming the chat here. Thanks, Red Clues. I appreciate you. What is the point of that? Just ask once. Well, you don't need to ask 20 times and copy paste it and just put it on there. It's stupid. Asking me where's like US dollar. I have no idea. We're not even on a chart right now. How am I supposed to? What do you want me to do? Just guess where it's gonna go? Sorry. Okay. See, I lose focus on these calls. That's why I smoke a lot of weed, guys. Consumer price index right here. Let's read this. Let's learn. Okay. If you want to learn, you're here to learn. If you're here for signals, you can join the signal group that we have available on Discord. But here on YouTube, we're here to learn. We're here to earn together, okay? We got to learn how to do this. I'm not your signal provider here. That's not what I do here. If you're here to learn, you're in the right spot, okay? So right now we're learning about consumer price index, CPI news, breaking it down. Let's learn about this because So you know exactly what these folders are when they release these, okay? We're not playing bingo here where we're just going to guess, is it going to go up or is it going to go down and we're going to over leverage. If you want to do that, trade like that. I don't care. It's not going to affect me. I don't trade like that. Good luck if you're going to continue to do that in the near future, because it will not last. You might have a couple lucky wins here and there, but consistently, it won't work in today's volatile markets, okay? So we have US core CPI versus regular CPI. I mentioned that just before what it is. So let's just go over this, and here's a blog breaking this down. So we have CPI, Consumer Price Index. That's what it stands for. So the CPI index measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services, okay? It includes all items such as food and energy, right? We buy food, we have to, and energy in our home to heat it and cool it, which can be volatile and subject to price spikes due to external factors like weather, geopolitical tensions, tariffs. And then we have also core CPI, okay? So that's regular CPI, including everything. And when we see the word core, we got to know in our head it excludes something. Core CPI is the CPI excluding food and energy, okay? So it excludes food and energy. By removing these volatile categories, food and energy, core CPI provides a clearer picture of long-term inflation trends. Economists and policymakers often focus on core CPI because it can be more stable indicator of underlying inflation trends. And here's the link to take you to Forex Factory if you want to read more about it. And then here, the 8 major groups of the CPI, Consumer Price Index. So these are the 8 major groups, okay? We have housing, okay? We have apparel, transportation, education and communication, other goods and services, recreation, medical care, and finally food and beverages, okay? So this is what it can, did you guys know that this is what CPI consists of? These are the 8 major groups. A lot of people just think it's food and energy, but notice how it's a whole basket case of all of these things all put together. So, you know, I travel a lot. I've noticed that my flights are a lot more expensive than they were last year. Education and communication. My nephews and nieces go to university. My kids go now to high school. School education is getting more expensive. Tuition is getting more expensive than it was last year. You guys say yes or no. I live in Ontario, Canada. I'm speaking for Ontario, Canada. I'm not speaking for Europe. I'm not speaking for Africa. I'm not speaking for Asia. I'm not speaking for America. I'm telling you personally where I live, everything is going up over here. Other goods and services. I went to my barber the other day. I used to pay $30 for a cut, a trim my beard. Now it's gone up to $40. So barber is going up. Maybe your salon for the ladies. Maybe I know my wife, she gets her hair done, and now she's paying like $300-400 for her highlights. It's getting outrageous over here. Recreation, gym memberships are probably going up, all right? Medical care is going up over where I am. Food and beverages are getting out of control. We went to Kelsey's, a restaurant, yesterday and spent $200, just my wife and 2 kids, and all we got was just basic food. We didn't order any alcohol, just one appetizer and just some meals. And then you have to add that 20% tip on top. Housing is getting out of control, okay? Apparel, clothing is a lot. We just went back to school shopping for the kids. Like, it's unbelievable. I can't believe it. I just bought a Nike tracksuit for my son. Was $130 just for a pair of jogging pants and a hoodie. So guys, that's what CPI is. Yesterday was producers, for the producers to sell us apparel, to sell us those clothes, right? So do you guys understand this? Can I move on from this? I want you guys to understand this, right? So that's take a snapshot of this or just follow our blog. So market impacts, I'm going to go through this really quickly. It impacts interest rates. Next week we have Powell and FOMC. So we have inflation indicators like CPI and core CPI influence central bank policy decisions concerning interest rates. So if everything is going up, it might signal that it's time to start lowering these interest rates. Give some relief to the people because it's going to get out of control. A lot of people cannot afford these higher prices anymore. Already, there's a lot of individuals trying to survive. They're working 2-3 jobs, working paycheck to paycheck just to make ends meet. They don't have any money for savings, unfortunately. They don't have any money for a vacation. They're just trying to just get by and pay their bills, and it's already squeezing them. And then now, you need a little relief in the market. So I agree with Trump right now that you need to start lowering these interest rates, okay? Whether it's 0.25% or 0.5%, that's what analysts are even saying. It's time. So if Powell continues to pause, it could be detrimental to these markets, okay? Not just the markets, but to the local economies. So higher than expected inflation might lead the Federal Reserve to increase interest rates, while lower inflation could delay rate cuts. Bond markets. So yesterday we had the 10-year, today we have the 30-year. If inflation rises, bond yields typically increase as investors demand higher returns to compensate for decreased purchasing power caused by inflation. Conversely, if inflation is low, bond yields may fall. That's why I was saying we got to watch that 30-year bond yield. We don't want it to get up to 5%. Bond markets, if inflation rises, bond yields typically increase as investors demand higher returns to compensate for decreased purchasing power caused by inflation. Stock markets, high inflation can erode corporate profits and consumer purchasing power, potentially leading to lower stock prices. However, some sectors like commodities or real estate may benefit from inflationary environments. AI tech is not really affected by this. You can see yesterday Oracle nailed it like out of the park. So tech is still leading the way. It's not really affected by this stuff right now. Importance of understanding economic data. So economic health, inflation data helps gauge the health of the economy. Investment decisions. Investors consider inflation data when making decisions about asset allocation, risk management, portfolio diversification, policy implications. Understanding inflation helps anticipate changes in fiscal and monetary policies. Volatility in trading during CPI. So we will be trading during this. We will be analyzing this. So let's learn a little bit about the volatility right prior to these releases. Increase volatility. What does this mean? CPI releases are considered high-impact news events, often causing significant market volatility. Traders should be prepared for sharp price movements, okay? Liquidity considerations. Liquidity can dry up around the release time, leading to wider spreads. That's what I always say, guys. Double check with your broker, your spreads, and increased trading costs, okay? So, some prop firms, don't even allow you to trade minutes prior to high impact news. There's probably a specific reason for this. No more excuses. Where? Oh, I thought you said, why am I reading this? Where am I reading this? This is available on our website. If you come to stocksnipertrading.com, click on more, click on the blog right over here, Consumer Price Index, and just click on it, and here it is. Okay. Sorry, I thought you said, why am I reading this? Because it's pretty important, but you said where. I apologize. It's on our website right here. Risk management, I was reading right over here, liquidity. Rules and tips for traders. Okay, so just some tips, some rules. Pre-release preparation. Review your expectations versus previous data. That's what we did. Understand consensus estimates to gauge potential market reaction. Risk management. Use stop loss orders to protect against adverse moves. Also, risk management is not just your stop loss, it's how much are you willing to risk on the trade during this time, okay? So if I'm going to, for example, if I'm going to risk 1% of my entire account today trading for the entire day, maybe if I take a trade during the CPI news, do I want to risk my entire 1% and go all in with that 1%? And if it gets stopped out, that's it, I'm done. No, I maybe want to allocate 0.2%, 20% of that entire 1%. If I do hit a trade, that's great. I have more to trade. It builds my confidence. But if I get stopped out, I only lose 0.2. I still have 0.8% to continue to trade, maybe make up that loss and continue trading once the market settles. But do I want to allocate everything towards that? No. So yes, you are correct, Chris. Sizing matters. So it's not just risk management doesn't just mean where do you place your stop loss. It's how much of a position are you taking? How much are you allocating to that trade as well? Okay, so there's a little bit more to risk management than just where do you put your stop loss. Okay, adjust position sizes to account for increased volatility. Okay, avoid overtrading. Resist the urge to make impulsive trades based on initial reactions. Markets can be erratic immediately following the release. Technical analysis, incorporate technicals, which we will get to, such as our support, resistance, our zones, points of control, potential entries and exit points. Okay, stay informed. Monitor economic calendars for CPI release dates and times. That's what we're doing. Post release analysis after they release the markets might be better to trade. After they release the news, analyze the market's reaction to determine if the move aligns with broader trends or was an overreaction. Okay, and by understanding closely following CPI and core CPI data releases, traders can better navigate financial markets and anticipate potential changes in market dynamics. Again, guys, if you want to join Stock Sniper Trading, here's the link right over here. Okay, so I'm going to move off of this. Let's continue moving, guys. Thank you, everyone. Almost 300 viewers on YouTube, guys. If you guys can now kindly leave us a like. If you learned something right now about CPI, you learned something, leave us a like, subscribe to the channel. Let's see if we can get this to 85,000 today. That would be a nice psychological number, and that's where our resistance is. We have a lot of resistance at 85,000. Let's see if we can impulsively break above it and close above 85,000. So it's kind of learning all about resistance and support levels with the subs. So thank you, guys. Now you see here on my charts, I have XAUUSD. This is gold spot Forex, and then on this you see I have GC1 exclamation mark. This is gold futures. Okay, so I'm gonna do two of these charts. They're both gold, but one is the futures. If you're trading the futures, this is your chart you're looking at. If you're trading spot Forex, this is our chart over here we're looking at. You can see that they are relatively similar, but not the exact same. They have different numbers, you can see, because this is trading futures liquidity, this is trading spot liquidity. Okay, so let's get started. We're going to get into the charts now, and I'm going to start with XAUUSD spot. We're going to get started, but before I do that, I want to just have a sip of coffee, if you guys don't mind. We're going to need all the energy we can get today. And good morning to everybody. Everyone on Zoom, good morning. Srinivas, good morning. Or should you say gold morning? I like that one. Not good morning, but gold morning. Welcome. Justin, good morning. Conrad, Reese, welcome. SSDN, Lee, thank you guys for joining. Sergio, welcome. Trump just posted just out, no inflation too late, must lower the rates big right now. Powell is a total disaster who doesn't have a clue. Yeah, Trump will say anything right now, you know, but I kind of agree with him. Powell needs to lower these rates now. It's about time. Welcome, Lee. Yeah, we need food. It's funny that they exclude food, but a lot of people, some people eat too much food, so it could skew those numbers. Like me, I'm eating too much Wendy's these days. Red Clues, welcome. Chris, wow, barbers cost $3 or $7 where you're from? No, here they're like average a barber is like 40 to 50 bucks over here, and then you gotta tip them after that, you know. So it's getting crazy over here. Nigel, good morning. Chris, Zizi, welcome. Armandi, welcome, guys. Okay, and everyone on YouTube, I appreciate you guys too. You know, thank you to everyone who's joining us. Mozren, welcome. Goldfish, Ignatius, good morning. Unity Trading, welcome. Justin, good morning. Pablo, thank you for joining, brother. I appreciate you. It's the beginning, welcome. The video thumbnail is as you dead. Yeah, guys, we got a crazy thumbnails. We want to get those clickbait, you know. So yeah, if you guys see the thumbnail, we got one that was I didn't create it. I just posted it. But things are funny. But welcome everyone. Okay, so let's get started. Let's get into gold now. We're gonna start with spot, and then I will do the futures chart. Okay. So if you guys are all ready. What are you guys thinking for gold today? You guys thinking that the CPI numbers are going to make gold go back up bullish? Or you think gold is going to continue selling off? Right now in the 5 minutes, You can see it got sold off, made a lower low, came up, lower high, new lower low. Could be pulling back up in a lower high and go back down, or it could continue to go. You're saying bullish. You guys are saying gold is going to go up. Okay, let's see. Let's first start doing our daily analysis. 4 hour, hourly, bringing it down to the 5 minutes, and then making our way into that news, into COMEX, and see how everything is going. It's great to have a little bit of a bias, okay? It's always good to have a bias. Oh, and yesterday I'll talk about, when we get to US 30, I want to talk about those sells that I took at Wall Street. My bias was to sell. It eventually started to break after 10:30. It was just, I got in a little early at that Wall Street. They wouldn't break it down. I think I had my stop loss too tight. I'll review it with you guys because I went over it and I reviewed it myself. I should have got that 925 block instead of the 930 resistance. So I'll talk about it, guys. That's the learning process. You know, I learned from it. So every time we take a trade, whether it's a winner or a loser or a break even, we should always go back, review it, see what we could do to make it better. And that's how we learn and progress as traders, okay? So I'll talk about that when we get to US 30. Right now for gold, I'm going to start off on the daily, okay? So you can see if you've been with us for the last couple months, you guys know you've seen it coiling up in here, coiling up that big range, that big massive bullish flag that started back in April where we hit the all-time high, and it was just in here and it started to release it in September. So you can see how bullish it is. Now we're kind of barcoding up here where it was bearish, where they pinned the all-time high up there at 36.75, and it went bullish yesterday and we're coming back down bearish. So there's a lot of room for this thing to come back down, right? But if it comes back down, I don't think it's just crashing, right? It's gonna find some points, some blocks, maybe some supporting areas, try and come back up. Then it might be a double top, then it might be coming down further. But right now, it could just continue turning right back up and go right back up, okay? So we're gonna start to dissect all of this in just a moment. If we go back here, let's just acknowledge where we had our previous all-time high, and it was right around there on spot, not futures. 3,500 was the previous all-time high. So let's just place a line here showing us that that was a resistance, and you can see now how it's support right now. You can also see that wick to wick, also 50%, that point of control of that candle. However, whatever option you do to figure it out, just acknowledge inside here could be still a nice demand pocket, a demand zone, stretch it into the future. So anytime if gold retraces back down to 3,500, there's probably a lot of pending buyers sitting in here. You know, when we use kind of the fish analogy, there could be a lot of fish waiting in here, you know, that didn't get activated. There was just the one pullback right there, September 4th, that hit the top of the green box, and that's it. It went off since then. So there might be still pending orders waiting to get activated in here, all the way from that kind of all-time high. So could be in here, right? We're nowhere near this right now. So will it come all the way back down today, next week, next month? Possibility it could, but right now it's nowhere near here. What you can do in the meantime is set an alert if you like, and when it does come down there, you will be alerted. I watch the charts every single day, so you know, as you guys do too. So I don't need to place an alert down here right now. I need more alerts in this area. Okay, so just again, one quick thing was we noticed this supply area back when just on these 2 days. Like, you can go back and watch our videos, they're all dated. Like, you can go back and see we figured that box, we stretched it into the future, we kind of caught that double top up there, stretching it into the future. You can see a third time it came in, a fourth time. There was fake outs, those Tuesday, Wednesday fake outs, those Friday, weekend, Monday fake outs. You can see again right there, there was a Tuesday, Wednesday reversal, came in again here. That was a Friday, weekend, Monday open, and then it started to close above. So this big zone that was supplied for multiple months is now an area of demand. So that's a bigger, deeper depth of market. So this is a great area to buy at 3,500, but this is even deeper and you get a bigger discount. So this area in the depth of market is stronger than this one, but we also have markets above us, okay? So I just want to mention that, okay? I know we're nowhere near that, but again, we're here for education to help you guys out as well, okay? So now let's start to dissect what's going on. So we have the big bullish candle on Tuesday, September the 2nd. So this was basically the start of the month. Remember, Monday, September 1st, US banks were closed due to Labor Day. And then when the US banks opened up, look at gold closed above, continue push. Look at the retest. It pulled back right at the top of the zone, went back up. We continued higher high. We're still holding above 50% of, you know, like this candle right here. So I can place like yellow lines now for points of interest. 3, 5, 6, 7 is a nice, we're above there still. Continue to make a high, close, pull back above this, continue to fill that wick, drive, and then we opened right here Tuesday. That's where we hit all-time high now on spot. Okay, so we got it up to 36.75. Again, I'm just going to use one orange line up there to highlight our all-time high. This orange line, I can change it now to yellow, but we want to know where our all-time high is up here, okay? And then now what is the reaction off of it? It got rejected and it closed down there. Yesterday we opened up bullish. It did come back up, lower high, get rejected with a little bit of bullish volume. Today we opened up, came up, lower high, lower high, lower high. We got sellers now engulfing yesterday's volume and they created a new low of the day. So with news, are we going to continue pushing down, or are buyers going to start picking this back up and then we're going to maybe possibly flip this bearish volume and drive back up, okay? So right now we are clearly consolidating. If I was to trap the volume, this is where I would trap it right now, right there. Like you can see the bodies of the candles right now. Okay, you can see I got a little bit of that bullish one. I got that shooting star body. I got yesterday's bullish body, and I have today's entire bearish body. And that's where the last few days is where it's trading. So, you know, this could be a bullish flag, but again, we need buyers to start, you know, asking to trade back above here in order to flip this and start driving back up to create that bullish flag and retest the all-time highs. However, sellers could start to push this down, okay? So now let's put ourselves in the seller's shoes. If the sellers are pushing this down, how far could it go down, okay? So what we're going to do is we're going to maybe figure out exactly 50% of this bullish candle on Monday, September 8th. That started this week. This is our weekly open right here, okay? So what I'm going to do is, again, just let's figure out 50% of this. I'm going to start from when that day opened right there and where it closed. This blue candle right here on September 8th, okay? So I can see 0.5 is right there, 3, 6, 12. So I'm going to place a yellow line exactly at right there. So you see how close we came, our bottom wick, to transacting right into 50%, and it bounced off of it, okay? So do I have a bullish zone a little bit above, right? The 618 and the 382, you can have those flipped on your Fibonacci. I'm not using it for the numbers, I'm just using it for the ratio. So I'm going to consider that to be a supporting block. Buyers are in there, and I stretch it into the future, okay? And now I can see, so today's bearish candle has already almost transacted right at 50%, and the buyers got activated and it's coming right back up right now. But we still have a bearish engulfing candle still, which could continue. Sellers could start bidding back down here, then it will come back down to lowest point, maybe break that orange or yellow line, and then come down to the bottom of the green box. That's at 3607, and if that can't hold, then the sellers will be in control, and this candle will be black coming down, bearish, 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 and there's another daily point of interest. That's where we closed on Friday and where we opened the week on Monday. So let's all place a yellow line right there as well. 3590, okay? Because this is support. This could be support down here too. Like for example, if today's bearish candle comes all the way down here, breaks that green zone, maybe here, stops, and it will come back up and then trade back into that zone, right? And it's got to get back above there and maybe and then to drive back up, okay? So just, I want to have some support levels below me just in case gold does sell off today, right? Where could it go down? It could test our green box. If it can't hold, maybe test here. If that can't hold, 50% right here. If that can't hold again, then we got a body, a body, a body, and a body. We can locate something right in here. Again, this is another thing that I do. I do a lot of freestyle trading as well. So someone asked me the other day, Ron, what is freestyle trading? Just, do you know what a freestyle rapper is? You just give them a word, they have no script, and they just go off. So that's kind of what I do. I do freestyle trading. I could either place the yellow support line right there at a body to body. I could go to this body to body. But what I do is, if I can't decide here, 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 or here, I go right in the middle of both of them, and I got that wick and that wick. And then I also look at the number. I'm around 35.38. Maybe if I bring it to 35.40. Right there, nice psychological number. And then I get that wick, I get that wick, and then I get right at 50% of open close there and open close here. So that's kind of what is called freestyle trading, okay? You're welcome to do it, but you got to have a little method to the madness why you do it, okay? So you see how I line up everything. I've got a wick, I've got a wick, I got 35.40, check mark, check mark, check mark, right? I got a data point, and I have a nice psychological level, and it's right at 50%. So again, let me just repeat this so you guys, it doesn't go over your head. I could either place it right there, and that's representing 50% of this blue candle. I can see this was a bearish day, came up, and it closed right there in opening price. That's a good area too. 35.45, don't get me wrong. That's a great area to place a point of interest on the daily. This is also a really good area right here because we had a closing bar and an opening bar. But what I do is, again, if I can't decide right there, or I could put two. I could put one right there. I could put another one right there. Or what I could do is right in the middle, right there, I could put it right there at that wick, and I have a little bit of a zone there, a little bit, and I have a little zone there, and then I'm at 35.40. So that's where I'm going to keep it today, okay? So don't ask me why I do that. It's just I explained it, okay? And this is what we got going on right now, okay? So what we got to do now is start to dissect from, let's start this week. Very bullish. We came up. We closed right here. Next day, Tuesday, was very bullish. Gold broke out all-time high and then got rejected back down and closed as a shooting star candle. This day opened a little tiny bearish, off of that shooting star. Sellers should have, broke this down technically off of that big rejection from the all-time high. This should have been a black candle and start coming down. It didn't, okay? So we had CPI data, and it was bullish for gold, right? It was bearish for the US dollar. So gold did not break down. That should have been a day where it broke down, okay? Just looking from this, just looking at the price action, not regarding news, okay? If you ask me, if I didn't know there was any news yesterday and I saw this candle Tuesday drive to the all-time high, get rejected and close right at the lowest point, that's a shooting star. That's like what I say, guys, that's a signal candle. That's a statement candle. If this was like a 5-minute and this thing opened bearish, 99% of the time I'm looking to take that sell with that momentum to continue to push down. In this situation, it did just open. Remember, brief open. The results of CPI were not until 8:30. Remember, this candle opens at 6 p.m., 7 p.m., 8 p.m. future. So it didn't really break down. It was, again, consolidating until the news was dropped, because then it possibly would have broke down. However, it was good news for gold, and then gold came back and went bullish, bullish, bullish right up there yesterday. So you see, it didn't target the all-time high. So let's place a point of interest, a yellow line at yesterday's high right there, and it's 36.57. We got rejected. Sellers are there protecting the all-time high. So what I do now, when I see a first retest and a protection from an all-time high, this is where I start to draw my zone. When I always say, guys, it takes two bodies to start understanding a zone. You don't need to wait for 10 candles to identify a zone. It takes two candles right there. I can see the all-time high, I can see it pinned it down, and I see it drove up yesterday on news, but it stopped right there. Why did it not drive up back to the all-time high and go out of here? Because sellers came in right here and are protecting the all-time high and pushed it down. That's what's called a lower high in the market. So above here is a resistance or supply zone or bigger sellers, whatever you want to call it. So once it's identified, I stretch it into the future. Just like this green box, I stretch it into the future, stretch that into the future. This is where we're trading right now. Unfortunately, we're barcoding on the daily. So after that rejection yesterday, we came back down. That's where we closed. You still see we had a bullish engulfing bar that engulfed the previous day's bearish volume. So where do we close? Where do we open? Let's have a point of interest right now on today's transition. 3640. Psychological number, open. We opened and it was initially bullish today. It opened, it was a blue candle coming all the way up. There's the highest point, 3649, 3650, right? Remember we had a difficult time at 3650 yesterday. I was in that trade. So you can see now 3650 is acting as resistance. It's our highest point of the day today. It's lower than yesterday, lower than all-time high. That's a lower high, lower high. It's a descending trend coming down. Okay, then the sellers pushed it back down to the opening price, and look, they've engulfed all of the buyers yesterday and made a new lower low. Okay, in order to continue to push down, we do have to make lower lows in the market. We've got now a new lower low and a lower high, so it's technically trending down, but we do have this overall bullish rally coming up, so it's not really breaking down. Gold is not crashing. Gold is just semi-bearish right now. It is coming down. We came down into 50% of that pocket, and the buyers were there pulling it right back up. So again, it might just trade like this until the CPI data drops. And again, if gold could really break down, if it's good for the US dollar, and gold could break down. However, if it comes out where it's again another negative and it's not good for the US dollar and US dollar sells, we could see gold come back up, but it's trading in sellers. Okay, so that's what's going on right now. We can locate the lowest point of the day if you want with a purple line, and you can see how close it is right at that 50%. It's only off by $2, 20 pips, like from the psychological 50%, that's at 3612. Our lowest point of the day is 3614. So it is still holding, okay? And now we've got a little bit of a bounce and it's coming right back up, possibly to where do we have another point of interest? Right there. We've got a body closed, body open. I know it's a lot of lines, but we do got to acknowledge this area right here because daily candles closed and opened right here at 3625. Okay, and these are those psychological numbers, 25, 50, 75. Notice the big areas that I have highlighted here. We're open, close, 3625. Notice up here the purple high of the day, 3650. Notice the all-time high, 3675. Do you guys remember the previous all-time high right up here when it came up? 3,600 on the dot. Okay, it's a live auction. You guys got to learn a little bit about auction theory as well. I'd like to do some more, not blogs on auction theory. I want to do more Wednesday webinars with the team on learning about auction theory. It's another strategy you can utilize while you're trading in the markets because it is a live auction. But I'll break it down like the way how I break things down. So I'll introduce also auction theory, okay? So it's good to learn. It's good to have it in your back pocket. Will help you out as a trader, okay? So you guys see now, we have a lot of indecision this week. It drove to the all-time high, got rejected. Sellers were in control. Buyers came back in yesterday, and sellers are in control today. So you see it's bearish, bullish, bearish. If these were 5-minute candles, what do you think I would be doing right now? I would box these in, and I would say, guys, let's wait. Let's wait it out to see who wins the battle, right? This could consolidate for a couple days. It's not the greatest. If you're a daily trader, this is where you got to be patient. Like this is where I show if the buyers win it, they can maybe bring it, close it above here, maybe retest this, and then drive to the all-time high, maybe a new all-time high. That's a possibility, okay? But sellers are also here. They've been here all week, and they could break this down today. If the daily bar, closes below here, maybe we'll invert this green zone red. Maybe we'll come back and retest this tomorrow, and maybe Friday we'll sell back off, okay? Or it could just continue to trade inside this zone and accumulate for today, tomorrow, maybe next week, and then next week they'll redistribute it, okay? Remember, there's only 3 directions of volume where it can go. You could either just trade bearish, come back up, bullish, go back, and just accumulate, but eventually it's going to have a redistribution phase, but when it happens, I don't know. Maybe during high impact news, they might, okay? But also there could be liquidity grabs as well. Like for example, let's say the news, gold sells today during the news, and then maybe later on day it picks it back up, and then all of a sudden it closes back in here. it could be building to break back out, and then they came down here, they swept the orders, they hit the pending orders, they picked up bigger buyers that want to take it to the all-time high, they got the volume, and then they're ready to go. So we also got to watch for fake moves, right? For liquidity grabs, liquidity sweeps, stop hunts, whatever you guys call them. Okay, so that's what we got going on the daily, right? Let's now move from daily to 4 hour. So now specifically when I'm looking at the 4 hours, I'm kind of looking at the pattern. We can see it's basically an M top with a lower top, right? So look at where it tested, right in 50% right there. It didn't come back up to the double top. If it was a traditional double top, come up there to the bodies. There was the all-time high. There's the bodies. There's our neckline right here. It came back up. That would have been a traditional double top right up there, you know, an M top, but it's actually a lower top. So they're lowering it right now. And you can see it tested right in 50%, that pocket of control of sellers, and now it's pushing down. So we did get a 4 hour candle move below and close below this yellow right here. If this was like 5 minutes, came up, came down, came up, and closed below the 5 minute support level. This is actually 4 hour support. So this candle coming out of Europe with the volume closed below. So it came up, it was originally bullish, came up there, they rejected it back down, lower high, lower high, lower high. There's that lower high from the all-time high, and sellers pushing it back down. Notice how it came all the way down. So I can see that London made the lowest point of the day, the London 4 hour candle, Europe, and then it came right back up and closed right there. And you see right now the 4 hour candle, this one has 3 more hours. It just opened, it retested the L line and got rejected, okay? So we could still see 4 hour maybe selling pressure coming down into this green box. However, the buyers have a higher low, so it could consolidate here and then they break it right back up, okay? If it does break up, are we gonna fill this entire wick and dry? Possible, but what I do is, again, what I do is freestyle, okay? From the yellow to the yellow. This is called tape reading the tape. I know some of you guys watch some webinars on YouTube of professional traders that read the tape. I'm not no professional trader. I'm a ghetto trader, trades in the basement, but I read my tape, okay? I'll show you how I do it, okay? And I have no license to do this. I'm not a financial advisor. I'm just someone who watches lines all day, okay? From the yellow line to the yellow line. This is how I teach my kids how to do this. It's like playing a video game, okay? We want to determine the psychological 50% from this daily point of interest to this daily point of interest. Very simple. There's my 0.5 right there. 3632 and a quarter. I want to just place a line right there. Okay. I could keep it yellow still on a daily, but you see, notice how I'm on the 4H, maybe the 1H. So I changed this to a white line. White line, anytime I know a price is approaching a white line, I know it's got something to do with an hourly. And I know my analysis is I did it on a 4 hour. So this is representing basically Europe. So it could definitely come back up, but maybe it finds resistance right there and it pushes back down. However, if it closes above here, it could use this as support to get us back up to that next yellow line, okay? So another way of determining this is from that big 4 hour candle. It's a big body candle. You can determine where the pocket is. Same thing. You can go from the open close. I'm sure it's somewhere right around here where that white line is, okay? So that is resistance above us. Do you guys understand how I just did that? It's not complicated, guys. This shouldn't be complicated. Just yellow to yellow. I figured out 50%. You know, I didn't even have to use the Fibonacci. You could just literally guess, pinpoint where's 50%, okay? And just watch. We'll see if volume comes back up and taps this. Anytime I'm in a 5 minute trade or a scalp, if volume is coming up there and I'm up 40, 50 pips, I always say, guys, I'm doing something at this line because it could be that hourly resistance. If I'm in a buy, they could smack it right back down. So it's happened to me a million times. So that's why I'm very disciplined when I trade. I trade to these locations. You know, when you have an entry point, you have an exit point. That's what I do, okay? So I'm not guessing. There's no guesswork in my trading. It's just trading to a plan, using proper risk management, And trading like this every single day keeps me consistent, keeps me disciplined. There are some days, yes, I do get stopped out. That's trading. Just because you can identify zones and points of interest and pockets of control and inverted zones and SMCI and ICT and ABC doesn't mean that I know a lot of traders in our group that trade ICT, and they say, Ron, I inverted the block, it was change of character, it didn't work out. I'm like, yes, welcome to the world of trading. Just because you understand a strategy and something does not always mean it's going to work out, okay? I wish trading worked like that. I would be the first one to tell you my honest opinion. Anytime there's a strategy that if it was 100%, we would all be winning every single day, okay? So it doesn't happen. You just got to trade. It might be more probable setups when you're trading that way, but see how the volume is just kind of dead right now, just consolidating right here. So what we do have to recognize is it is got a bearish pattern, okay, where it came up here on the 4 hour, came back down, came up lower high and breaking. So, this green zone will determine today's fate of gold. If sellers can break through this, we could drop down to here. If buyers continue to hold this area, we could start to drive back up, okay? So it's all waiting for the CPI data. Okay, let's now break 4 hour structure. Okay, you guys take a snapshot of this if you guys want. Right now, with your phone, whatever, take a snapshot so you know how the 4 hour pattern looks, right? So you don't have to keep going back and forth. Take a snapshot of this, and then you can see. If you want to go in a buy, you know what you're buying against. If you're selling, you know what you're selling into, right? So just understand, 4 hour candles are very strong. 4 hours of trading volume is in there, okay? Now when we go to the 1 hour, look at what we see on the 1 hour. Now we're dissecting. We're breaking the daily down. We're breaking the 4 hour down, okay? So now I can see exactly what hour it was when we hit the all-time high. It was Tuesday at 10 a.m. And then it was a big bearish engulfing candle come back down, which took us to that leg coming down. Then it kind of produced a bottom here, 3625, and it was a double bottom on the hourly where it went up, came back down, double bottom, and there's the volume on the hourly closing above the neckline and continuing to push back up. But notice when we got up here, rejection, rejection, rejection. We couldn't trade into the all-time high supply. So if we do, like just looking right here, guys, look how easy this is. I know we're nowhere near trading back in here, but if we do you guys understand what I look for? Okay, do you see that body to body right there? Let me show you guys how I learned how to do this right now. I'm saving you guys 5-10 years, where I was learning this all by myself. I'm saving you a lot of time right now, okay? So do you follow me, guys, on Zoom? Do you guys see what I'm looking for? When I always say, sometimes I look at wicks, but the bodies are more important. Right there. If I was to place a white line right there, 3666 and a quarter, do you see right there? A body hourly opened right there. Sorry, closed right there, and look at where the bearish one opened. Okay, so do we all see that, right? Please, guys, I gotta know if you know this. Please, 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 stop wasting time. Just tell me yes, yes, yes. Do you guys, you got this? Am I on? Am I live? Guys, can you guys hear me? Not one person is responding. Holy, there's 500 viewers. And you guys on Zoom and not one person responded. Okay, you guys got it. Justin, Sergio, thank you. Guys, now watch. You want to see magic? I'll show you guys magic. Okay, so I just literally, remember the red zone? The size of the red zone was determined from when? From the previous, back in April of this year, okay? So the zone is determined, the size of it. I didn't guess the size of the zone. Those hourly candles came in there, closed and opened right there. Now, when I always say the 50%, let's grab our Fibonacci and let's just do this from the bottom of that red zone to the top of the red zone. Look at the white line, the bodies, body closed, body open, point of interest. Look at how it lines up exactly 50%. There's the 0.5, 3, 666 and a quarter right there. So, now if you want to take it a little further and you want a control zone, you see now how I utilize my Fibonacci tool right there, and now it gets a little bit of the wick, a little bit of the body, and I can make that red, and there's my zone right there. Okay, so it's now, guys, you can literally see what you're trading into if it comes in there. Okay, so if gold, you know, gets bullish and breaks right through here, look how clean the traffic is. There's no traffic here. Like, this is all traffic, all these candles. Look here, it was just a clean bullish candle that broke out, and it was a clean bearish candle that just came back down. So if we come back in here, it could be just a clean move filling right back above there. I measure that move, so I know if I'm trading it, it is approximately 65 pips. That's why I always use my measuring tool. And sometimes when I'm taking a scalp and if it goes right up there, I'm doing something. I tell you guys, nudge, nudge, I'm doing something at the zone, because look at where we're coming into. We're coming into 50%, this point of control of an all-time high supply zone. You're telling me there's not a big block of sellers there? So what could come up easily up there could just come tumbling right back down. And then there's your lower high, and it's protected in that zone, right? We have to cut through this in order to, you know, break above it, close above it. And if we do that, we invert that red zone green, and still that white line is right there. And then we could drive up to the all-time high, right? It moves in levels, it moves in blocks, it moves in, the market moves like this, right? I don't move the market. The market moves, and this is how it moves. So when I figure this out, that's why I stretch these into the future, and then I place an alert right at that white line, right? Place an alert. I'm showing you what I do. So when it comes up here, we're nowhere near this, but what happens if it eventually comes all the way back up there? I will get alerted. And guess what? My bias is to sell from there, correct? But that's how it works, guys. That's when I started to figure this out. I'm like, holy shit, how is it like a magnet where it's attracted to 50% of a zone or that pocket of control? And that's why I trade to these, like, reading the tape, because it's very accurate, guys. I can tell you guys an honest opinion. It's very accurate. Not accurate to the point where it works 100% of the time, but it's very accurate. And some of the snipers in Zoom, like Serge, is killing it because he's identifying these pockets. You know, he had his stop loss a little higher than me yesterday and still stayed in the sell and cashed out. So, you know, I screwed up on the block where I was a little too tight on my stop loss. That's why I want to explain the US30 trade, because I reviewed it myself and I know where I screwed up. So I learned from it. But okay, so great, guys. I hope you guys learned something from that, because these sessions are about learning as well, okay? So it's up there. It's a block in the market. It's hanging around, right? There is some fish swimming up there. So they'll swim up there until the price comes back up there, but we're nowhere near that right now, okay? So we are now hourly. We're pushing back down. So it retested that, pushing back down. If I go to the 5 minutes now, okay, so look at the 5 minutes. We are in a trend pushing down, okay? From up here, it came back down, came back up. Lower high, it pushed here, it couldn't break that yellow line, came back up, a lower high, then they broke it, lower low, came back up, right up to that purple line again, they dropped it, new lower low, all the way down there, came back up, lower high, they came double bottom right there, came back up, but couldn't break above the white line. And then again, we got another push all the way where they pushed it down. Now I can see exactly the lowest point of the day was 515 and came back up. Now it's coming back up. It's coming back up, pulling back, higher low. See how it's having a difficulty time breaking above the 3.625. You can see there where the volume held above, how it's support. There was a couple impulse moves, but the volume closed above. That bear candle right there, that candle exactly at 5 a.m. was a confirmed candle that closed below, which pushed us to the lowest point of the day, and now we're coming right back up. So on the 5 minutes, me as a 5-minute trader, I utilize this yellow line as a daily point of interest, and then I can see that there was a couple bodies above it, and there's some wicks and bodies below it. So now I know where my 5-minute zone is. My 5-minute zone is right here. Let me just adjust it. Okay, so you see what I did there? I didn't do anything magical. All I did was I utilized my yellow line as the daily point of interest, the most important line, but I go a little bit above to those where it came down, it closed right there. Came down, see where it opened? Again, here it came down, bodies, came down, volume above, here it closed below, pushing down. Now I can see that candle, the wick traded in the red box, came up. That one traded all the way at the top of the red box, pushed back down. That one traded in the red box, put back down. In order to buy on the 5 minutes, I got to see a 5-minute bullish candle close above here, I'll flip this zone green. Maybe we'll come retest this, drive, maybe come back down, and then drive all the way back up to that white line, right? But we're nowhere near this. So I can still see the sellers are still pushing this thing down. So that is technically another lower high. And now what we got to see is, do the sellers have enough to come and take out the lowest point of the day? And I know that that yellow line is exactly 50% of this big green zone, okay? So what we got to see now is, will it come down? Not to the lowest point of the day. You see where the volume is? I'll place a red line there to show you. So it came back up. There's the neckline. We're coming back down now. Will we get a higher low, double bottom, or back down to the lowest point of the day? So let's say it's a double bottom right here. We could be coming back up, and then we could be following this arrow right over here, right? So that's what we got to watch for. And on the 5 minutes, you see right there, that base of support. I can see that candle came all the way down to the lowest point of the day, but look, it got rejected right back up. It came back down, and then that's where it pivoted. It stopped right there. You see the bullish engulfing candle print right there. So this red line is our 5 minute support right now. So if you're a buyer, maybe we got to wait to see if it can build up. If you want to buy inside here, this is where it is an area of support. There is demand, but you're near the lowest point of the day. We are in this current trend coming down, so we can kind of add a parallel channel to show you guys what the trend is. So from, like, let's say right here, the highest point of the day, we're coming down, okay? So I keep it, and that's our trend right now. So from the highest point of the day, it dropped down to the lowest point of the trend. See these dotted lines? These dotted lines are the psychological 50% of this trend line. So this is our upper resistance. This is our lower support. The dotted line is exactly 50% of this channel. It's a really cool tool to use in your trading. So if you want to know what the trend is, you know when they say trade with the trend is your friend? Well, this is showing us the right now on the 5 minutes, a bear trend is the trend right now. It's pushing down, comes back up to the dotted line. You can see its resistance, which takes us back down. We get volume close above that dotted line, which takes us to the top of the channel right there. Comes back down. We had some consolidating right there, and then we utilize our block, and it came back up. You can see it broke down to the bottom of the channel right there, lowest point of the day. Coming back up, we got volume closing above the dotted line. So are we going to get the buyers continuing to ask to trade and maybe possibly break the trend, make this support? Then we could clearly break out to this white line, okay? That could be a clean move coming up, but we're nowhere near that. So I want to place an alert at the yellow line. If it gets up there, I want to be alerted to watch, either to sell it back down or watch the buyers close above, okay? So see, that's our channel, okay? It could continue to break below this dotted line, break that 5 minute support, then we're trading at the lowest point of the day. If they break it, maybe find some buyers deeper down in here. Remember, there's bigger fish swimming down in here, okay? And then that could reverse it back up. However, it could just continue to do something like this, where it comes back down here, like breaks, comes back up, goes back down into here, come up, and then you see we're gold is selling off, and then this green box could be turned into a red zone, and then we're pushing down to 3,600, okay? But right now, what time is it? 7:15, okay? So we got another hour and 5 minutes before COMEX. We have another hour and 15 minutes before the CPI news. Is anyone in a trading gold right now? You guys see where we're trading right now. Okay, so hopefully now you guys have a little bit better understanding of my lines that I do. Thank you guys. Almost 600 viewers on YouTube. This is excellent, guys. And YouTube, thank you guys. And also you guys on Zoom, thank you guys so much for joining. If you guys wouldn't mind hitting the like button, we do appreciate it. Thank you guys. We have 169 likes. If we can get it up to like at least 250 likes, we have almost 600 viewers. You know, 50%. I'm a 50% guy. So if we have approximately 600 viewers, half of that is 300, 50%. Let's get above that. Remember, I get bullish when we're above that, okay? And if you haven't subscribed to the channel, subscribe. You can learn with us daily. We do live education, live trading. Everything is live. I love back testing, but it's not great for live trading. No one wants to see yesterday what we should have done, what we could have done. It's all about live, okay? I believe in live education, live trading. It's the best way to learn. We learn from each other's mistakes. We feed off of each other. I learn from you guys. You guys tell me, maybe you guys are looking for buys, and maybe I was looking for sell. I could switch and be with your focus. Like we help each other out. It's like a trading floor, guys. We're all here to win together. We're not against each other. We're retail traders. We need to unite. I don't understand why communities don't do this. Back in the day, we used to unite as retail traders. We used to unite to beat the market makers. That's what we did 10, 15, 20 years ago. Now it's like everyone's for themselves. I don't agree with that. We can all learn. There's amazing YouTube traders out there. There's amazing streamers. There's all kinds. You can learn from good traders. You can learn. There's a lot of shitty traders out there too that I don't follow, but I see them and they're just gambling. But they do it for YouTube and to grow channel. I don't do that. Okay, if I take a loss, I take a loss. It's not here to grow YouTube. If I take a win, it's to show you guys we're in a trade to win. It's not to grow YouTube. I want YouTube to grow for our education. That's why I want it to grow. We are an education platform. We don't consider ourselves to be a live trading platform. We are live education. Okay, so guys, in the meantime, do you guys mind if I do the GC chart? Okay, so that's our spot gold, right? I'll leave it right. Oh, sorry guys. Let me add the SST daily indicator bar so we know, so we got a heads up of how, look at the daily bar, okay? So you remember we opened right here at 36.40. We hit the highest point of the day. I can see now if I go back, there it is, exactly at 21.30 when we hit the highest point of the day. And since then, we're in this bearish trend coming down. Lower low, lower high, lower low. That is a lower high. We might get a new lower low, okay? And this is the big bear volume that's coming down on the daily. So you see we're not too far off of that lowest point of the day, but this move right here, since 5:15, is representing the daily wick of the buyers rejecting the move. So this red zone right here is very critical because it's lined up exactly with the daily point of interest and our trend line. So it could be a trend break, but even if it comes up, that's why I have that white line there for the 4-hour. Remember the 4-hour resistance, because it could just come right up there, and again, it'd be a lower high, and they smack it back down. Okay, so we got that. Do you guys want me to add the EMAs? Okay, so we're at our EMA 9. This is this green line, and the EMA 200 is this purple line. You see how it's getting to our 4-hour resistance right there. Okay, so again, if it does, break out of here, we retest this, maybe we look for a buy. If we're in a buy, you notice, see how it will come up to that 4-hour white line, and then the 200 EMA is there too. And sometimes that 200 EMA is like a big cloud, comes down, and then it pushes it down. So that's why if we go in there in the profit, we could be up 50, 60 pips. We got to at least take our stop loss to break even, maybe scale out a little bit, because you can see we're coming to 4-hour resistance. We're coming into about the pocket of control of today's selling volume, and 200 EMA is there as well. So that's telling me if we come up there, we're still counter trading, but we can grab some pips, but we got to be very disciplined up here. Not play the woulda, shoulda, coulda game. Trade to a plan. From here's point A, there's point B. It can go to point C up there, but you got to have a little help. Like you got to break above there. You got to close above there. You got to retest this. Then you got the volume above. You're creating that 4-hour resistance into support. Now you got volume closing above the 200 EMA. It might be using the 200 EMA as a support indicator, and then that could give us that next push to get up to the opening price up there. Okay, so again, I trade candle by candle. It's hard to say because that could be a good buy option, but what if the sellers keep pushing this thing down and we keep selling off, right? So you got to keep also the selling bias as well. Okay, so I let the candles prove to me. Right now, this is not good trading. Okay, so this is not good to trade. You can see buyers are trying to accumulate right now, the lowest point of the day. We still have sellers pushing it down. So again, if you're trading right now, buyer selling, whatever it is, I would suggest going small right now, feeling it out, seeing how it's moving, who is accumulating more. If you do get stopped out, it's not the end of the world. Take a small loss, and you still have more time to trade during the markets today without over leveraging. Okay, so that's what we got going on for gold. On spot gold, XAUUSD, I'm going to do now, I haven't done this in a long time. like I do trade futures, but I haven't done this on a live YouTube, dissecting this GC. We've always used XAUUSD. So for the future traders out there, I know you guys are trading futures. There's some great prop firms out there. This is for you guys, okay? So what I want to do is, this is GC1 exclamation mark on the 5 minutes. This is how gold is moving on the 5 minutes in the futures market. You can see the numbers are completely different, but again, I'm not looking at the numbers. What I'm looking at is, we're going to look at zones, points of interest, and we'll break it down for the future traders, okay? So let's again start off on the daily, right? And they look similar, okay, but not exactly the same. You see there's gaps in between these candles and things like that. The other Forex candles are more cleaner. You can see like the actual volume in the candles, but I could still see right here on April 22nd, this was when spot hit 3,500 all-time high. In the futures, it's 3,508, okay? But we can still see that when it came up there, that was a previous all-time high, okay? Also, the date lines up perfectly. So I know by trading XAUUSD spot that it was 3,500 on the dot, okay? But if I'm trading futures, it's 3,508. I can see how it got rejected back down, okay? You know that 3-bar consolidated right there? That's where I know it is, because I know the dates, because I trade every single day right there. If I was trading futures, I would have acknowledged that bullish flag. I would have made it green. I would have stretched it into the future right there. I would have saw that that was a false break above down there. That was the lowest point we hit. 3,120 was spot. In futures, it's 3,123. Extending the zone into the future, you can see that that block is still below us, and we're diverging away from it, okay? Where was that supply zone? It's right up here. You know, you can start to see how it's developing. Again, I remember I told you guys, it only takes 2 bodies to identify structure, okay? And then you can see kind of the false breakouts. Again, we had that big move right up there, coming up August 8, push back down. And then we get closing volume again above there. So this zone is green below us in the futures, okay? So you can start to see your zones. You can draw a trend line. Same shit, guys. It's all the same, okay? If you're drawing trend lines, you can see it's moving up on the trend. We broke out of there. It is ascending. We had volume close above, retest. Short wicks analogies work the same, and it's continuing to push up. We could look at 50% of this candle. Everything is the same. That's why price action is beautiful. Price action, once you learn it, you learn the language of trading. You can trade anything. You can trade stock market, you can trade options, you can trade Forex, you can trade futures, you can trade crypto, you can trade anything, derivatives, bonds, it doesn't matter. If anything can get plotted on a chart with a candlestick, it's the language of trading. There's no other thing to say about this. That's why I believe price action is the best to learn alongside all of your other strategies, right? But your other strategies, you got to learn a little bit about price action. So to me, this is really important. Now in the futures, I can see we hit our new all-time high. Okay, I know it's 36.75 spot, and in the futures it's 37.15. Okay, so this is previous all-time high. I can change this to be a normal daily point of interest down here. Okay, so you see we got bodies now. You know, I can see points of interest again. Let's take a look at what we got here. Here's a nice little gap up zone. You see where it closed, they gapped it up, then the wick, they filled the imbalance and came back up, and next day it came all the way back down. Look at the volume. So right in here, guys, this is where, you know, like, I place a zone. I know this is the first time for you futures traders see me doing this, but it's great. I hope you guys are learning with me too, because I do this every day on spot, but I don't do it on futures. But this is how you can look on futures. You see that little gap imbalance and where they filled it? Right there. That's where you can identify your zone. Remember, it takes 2 bars to identify a zone. You don't got to sit there and wait for all week to figure it out. Right there. It closed. They gapped it up, it filled that imbalance, and continued to go back up. So, and then I see that was a false break, came down there. I can pinpoint that with a daily point of interest, but I would more go so right into 50% of that body, that candle. So I see it came down, higher low, went back in, look where it closed, at the zone. Then they gapped it down, back down, and then we got the big bullish move coming out of there. So that's a zone holding. If we ever come back down in here in the futures, that could be a good area. Look at it, 3,600, right? So, you know that zone that I just identified? Let me show you guys. Ron's cooking today, okay? So some days we got to cook. There's the size of the zone, right? I determined the size of the zone. Let me just clean it up now since I zoomed in. Right there. Body, wick, and let me just increase it to that body right there. So you see, guys, my zone is from that body, that wick, to that body. That's the size of the zone. Now, let's figure out 50%, okay? Same shit. Now we're in the futures. So you're saying, I'm showing you that this strategy works for anything, okay? There's my fib. There's the size of the zone. I told you I broke it down why it's that big. There's 0.5, okay? You could also, if you want to pinpoint inside here, like the true deep right there, okay? So you're right there near that red line. Now I see the numbers. Look at where the 0.5 is of the zone, 3599.40. Okay, so basically 3,600 psychological on the dot. This is in the futures, okay? So you see how it works on spot, it works on the futures. I don't care what security you guys give me. I don't care. You can give me the guy on the street corner that's selling gold in your local downtown, and I'll tell you his prices. You tell me his prices, I'll tell you the point of control, what he's selling at, okay? This is like street magic here too. You tell me the prices on the streets, I'll tell you where the fair values are, okay? So I'll tell you if you're getting ripped off on the street. Believe it or not, where I am, there's a guy down, like this is not a joke. There's a guy downtown, he's selling gold, like necklaces, you know, like bracelets, like right there. He's selling them. He's buying low, selling them high. I always go and I play with the guy. I always say, nah, your prices are too high. You got to come back down. You know, you got to cut it. He's a good guy, man. But it's funny shit out there. He's like, how do you know all these about, because he's been doing it for 30, 40 years. He's a seasoned veteran. And I'm like, I know the points of control. He's like, can you teach me this? I'm like, absolutely I can. No worries. It's a street education. We can teach you guys everything, okay? So you see, now stretch this into the future, right? If it ever comes down there, futures traders have an alert in there at 3,600. That could be a great opportunity to buy out of there, okay? So that's a block below us, just like we figured it out on spot. We can do it on futures too, okay? Anything. Now, again, I can see the all-time high, come back down, body, 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 okay? So you know when I look for my all-time high supply zone, I use the all-time high wick, 3715, bring it down to the local bodies, right there. I've got a wick, I've got a body, and a wick. Make it red and stretch it into, stretch your futures chart more into the future, okay? I know it sounds silly, but stretch your futures chart into the future, right? Now I can see lower high, lower high, lower high. You guys want to see now some more magic, okay? Why did I choose the size of the zone? I went to the highest point, all-time high, brought it down to body, body, body. Now bring your Fibonacci tool from the bottom of that red zone to the top red zone. Let's figure out exactly 0.5 of that zone. Look at the number. 36.98 and 40 cents. I'm $1.60 away from 3,700 psychological zone. Now you can do your point of control. One standard deviation, not standard deviation, one ratio above, one ratio below. Right there. There's the selling pocket right in there, okay? Are we in here? No, we're moving away from it, okay? But we can acknowledge it. There's a lower high, lower high. You see this daily candle came right in there, right there. 3,700, rejected back out. We came in today. When I start dissecting today's daily candle, that's our high of the day, lower high pushing down, okay? So are you guys getting a little bit of a hang of how to do this? I know today's a big trading day, but I know now you guys are learning spot and you guys are learning futures charting, okay? Hit the likes, guys, if you guys are learning. Again, important areas. There's a body close. It lines up with this point right here. So, you know, when I'm looking to put another daily point of interest, right there, body closed a body. Look at it, it kind of closed, they gapped it down right there. So the futures market came back down there. I could find exactly 50% of that and draw a zone, but I want to keep it localized right there. Another one is now this big body candle to start the week. This is an important candle. It's Monday. So let's figure out exactly 50% of Monday's futures volume. Right there, open close of the candle. Same shit. I do it on spot, I do it on futures, I do it in the past. It doesn't matter, okay? Where's 0.5? It is right there, okay? What number is it? 3656. Can we draw a bullish point of control out of here? Yes, we can. Right there. Now I can see yesterday and today we're trading exactly right into that bullish point of control, and it is still holding, okay? So now let's start dissecting yesterday's volume and today's volume. So you see how I'm setting up my top-down analysis ready to trade the futures on any time frame, but I'm starting off with the highest points, getting my daily points of interest. So I can see we started Monday, big week, took us Tuesday to the all-time high. We retraced back down. Yesterday we had CPI news. Okay, it was initially bullish, then it came back down. They gapped it down right here, had a low, came back during CPI, hit that high, got rejected, and now today, let's see what happened today. So we closed, they gapped it down. We can see a gap down. It didn't transition right at the open, so there's a little bit of a gap down, but it filled that gap. I can tell by it was bullish, filled the gap, came up, hit the highest point of the day. Right there, so purple high on the futures chart. It should be 3687.50 cents, and it's a lower high from yesterday and the all-time high. So that's that descending move coming down. Sellers are in this red zone offering. More sellers are up there than buyers. They're pushed it down, back down to the opening price, and we had a look at sellers are in full control of today's candle. There's the bearish volume, bearish volume, bearish volume, bearish volume. We have engulfed currently yesterday's bullish volume, and they came all the way down. Look, tweezer bottom lows, okay? When I draw a wick at today's low, look at yesterday's low right there, 3651. Equal bottom lows so far. So they're holding it in this green zone. We got a little bit of buyers bringing it right back up. So if the buyers come all the way back up, are they going to continue? Are they going to flip today's entire bearish candle and turn it bullish? Possibly. If it's shitty news for the US dollar, it could happen. However, what if we just come up to 50% of this bearish candle, current volume? Again, it's a moving candle, so I know it's not going to be 100% accurate, but it can be 90% accurate. Right there, from the opening volume to where we are right now, I want to find 50% exactly of today's volume. It's right there. 3,670. Put a yellow line, and that tells me right there that's exactly 50% of today's volume. I could find the bearish point of control of today's current volume. Again, it hasn't closed, but that's the current bearish point of control of today's volume. Right there is my red box. So if we're driving back in here bullish, we got to know that we're coming right into the heart of where that selling volume is, where they could definitely push it back down. However, if we invert this zone on the 4-hour, hourly, 15-minute, 5-minute, we could be pushing our way back up, okay? So now, if we do continue to push down, we break here, we could be coming all the way down to this yellow line. If it continues to come all the way down, I could have a marker right here. There's a wick, and a body, and it's half of the yellow lines. Let me show you guys how you can do this in the futures too, okay? I just want to show you guys how easy this shit is. From this yellow line to that yellow line, again, 50%. Markets work on psychology, guys. You know, you can literally trade sometimes with just 50% levels. You know, you don't have to do any fancy stuff. So that is telling me from the yellow line to the yellow line, that's exactly 50% right there, okay? So that's a good point of interest just to have on your charts as before it breaks down to this green box right there, okay? And then we got this big bear candle coming down. Let's go to the 4 hours. Look how it's moving on the 4 hour. Okay, so we got the 4 hour. Again, it's got the same pattern where we came up. There's the neckline, all-time high, came back down, There's our support neckline. We came back up. I notice it's not a double top M up there. It's a lower high in that red box that we just identified. And now it's coming down, coming down. They've already closed below there. They rejected the 4-hour candle, and now it's coming down bearish. So look at the tweezer bottom lows, 1 and 2. So are the sellers going to break those lows and come down? If I was a scalper in the futures, I would be looking at that 4-hour candle right there at 6443. Dropping from 3,651, right? Right there, 50% of that candle. If it comes all the way down, you got your yellow line and continue going down. But right now, the 4-hour is bearish. It's very bearish, and they got that lower high shoulder right there. So, that's very important for sellers. If buyers were strong, they probably would have came back up and tested 3,705, but they right here, they're below 3,700, getting pushed down. So this could continue to break. Now we go look at the hourly, 1 hour. Now, again, I'm breaking things down on the hourly. There was the push up. Again, there was the big news. Came up, engulfed back down, come back down. There's the double bottom on the hourly, close back above. You see red to if you had this zone already done, see where that hourly body closed above. There's your double bottom close above. You change it green. There was your retest. It came in, and you could have bought out of that hourly bullish ignited candle with stop loss below there. Take it back up to that zone. You see, I know we want more and we want more and we want all-time highs, but sellers are there protecting it and pushed it right back down. Now we're coming down, lower low, lower high, lower low, lower high. Tweezer top highs at the purple line. You got single body candles now redistributing to the downside. Found 1 hourly candle at 2 a.m. That's pre-London. Then London is a hanging man where it came down, back up, and now we're coming down. 4 a.m., 5 a.m. I can see made the lowest point of the day, equal bottom lows, and it's coming back up, but building inside here. So are the buyers going to continue to bring this up, or sellers are going to continue to shoot this thing down? Right now we have an hourly bearish channel. If you want to place a bearish channel on the hourly, you're welcome to do that. Start it maybe up here. Again, it's hard when there's wicks. Some traders ask me, Ron, do I place it at the wicks? I try to get as many touches as I can. So what I do is I'm going to place it right there, okay? And I'll explain why. Explain why in just a second, okay? So I got that wick. I got that wick. I got that body and that body. That looks to me like an impulse. Volume close, look inside the channel. Again, that was an impulse break to the daily high. And look at the volume close back in the channel. Retest the channel, back down, come back up. We're still inside this channel. Now we're below the dotted line. So we're in the lower half of the channel, still bearish, but we're trading in this strong demand zone. But right now, sellers are still in charge here. If we start getting volume closing out of this channel down here, you could see that natural break coming down, okay? So we are in an hourly channel coming down, still bearish, but this could be where it's developing a double bottom. Okay, you can consider this double bottom as one bottom right there. Our neckline is by the purple line, daily high. We're coming back down. So in here could be a second bottom. But again, look at the resistance we have. If we're developing it, we could be coming, there's the parallel channel right into there, and then they could just dump it right back down. We got to get out of here, close above to invert this back to support in order to shoot ourselves back up here, okay? So if we're buying, we are going against the trend, guys. So just so you know. So news is coming in another 50 minutes, the CPI, which could change up everything. But right now, the market looks like it wants to continue to push down, and then we just need that CPI news. So now on the 5 minutes, here's your futures chart on the 5 minutes, okay? They're candles. I can see where they create double tops. I can see where they break. I can see where they retest. I can see where they're barcoding. I can see where they're consolidating. I can see a redistribution of volume. I can see how they're building in the green zone right now. So, I can also see critical levels on the 5 minutes, all kinds of things, okay? So what we got to really watch for is just above here is we do have some resistance above here, okay? It could build, we could get a 5 minute close again, and then just measure it, okay? Same measuring system. If it comes up and shoots up to that yellow line, you see how it's 7.2 in the futures? I'm sure you futures traders know that that's $7.20. So for us, Forex traders, that's about 72 pips, correct? And you get it right? Am I right or am I right? You guys tell me. I don't I don't do too much futures trading with you guys, but I can do this no problem. If you guys want this, if the demand is there and you guys want this, I'd like to do this with XAUUSD, GC, split screen. We can do it with NAS100 for Forex. We can do NQ, and we can do it with US30 and YM. If you guys want to do sometimes SMP, we do it with ES. No big deal for me. It's the same shit for me. It's just maybe some of you guys are trading futures, some of you guys are trading Forex, but we can do this, okay? So if you like this analysis, hit the likes. The likes tell me everything on these channels. The last 2 days, it's been above 500 likes, so that's why you guys got me pumped to do this type of stuff. If there's no likes, I won't be doing this anymore, right? You guys dictate the demand of YouTube, what we do here. So it's in your hands, not us. That's why I always remind you guys, hit the like button, subscribe to the channel if you like what we do here. Let's get this thing to 85,000 and let's continue growing together. We'll grow together. You guys are a part of this YouTube channel just as much as we are, okay? You guys are the reason why we're growing. Okay, so there it is, side by side. Okay, so guys, let's get prepared, okay? Because we do have lots of news coming up starting in the next 30 minutes, okay? It starts with Europe. We do have our Eurozone news. It's basically the FOMC in Europe, the main refinancing rate and the monetary policy. We can see that they're forecasting a pause, but we'll see if the actual number is a decrease or a pause, 2.15%. And then we have COMEX at 820. And then we have 8:30, the big day news. Okay, this is what the market is waiting for, the CPI data coming out. And then we have our weekly unemployment claims. And then at 30 minutes later, you have the ECB press conference answering questions regarding the actual results of the refinancing rate. Okay. Okay, guys, are we all good on Zoom? Chris, gold sells running 30 pips. Hopefully this plays out before the news. Yeah, let's see. Right now it's dropping. We gotta watch this low of the day. Okay, the purple line down in here. It's coming down nicely. And futures is nice too, because you guys are trading with no spreads, right? When we trade spot, there is spreads involved. So that's you know when we line up the pros and cons over here, the advantages and disadvantages. You know, when we're trading over here spot, there is some spreads involved. Over here, no spreads. That might be good. A reason to trade futures. I currently do not trade a prop firm right now. I trade my own money, but you guys trading prop firms, what do you guys prefer? Do you guys prefer Forex prop firms or do you guys prefer futures prop firms? This is a question for everybody. Futures, Ricardi? Is it red? Yeah, futures due to no spreads. That's, yeah, I agree with you. Why, like, you know, you don't want to give back, you know, spreads. So that's good. Del, welcome. Good morning. Delio, sorry. Lee. Good, welcome. So futures seems to be the best for prop trading. Reese, Top Step, and Apex both bang on and can trade multiple accounts, which makes it amazing. Yeah. Yeah, so I see a lot of you guys are futures traders. Wow. Okay, so looking here, okay, remember this red line was the support right there. Now we closed below. Looks like the red line is representing 50% of that volume. The candle is coming up bullish because it is a higher time frame green zone. So it's hard. It's not easy to sell into a green zone because it's green for a reason. The buyers are here. Again, but if it comes up, gets rejected, maybe we'll push back down. Maybe it will close above, come back higher, but it's still got some good push down. So let's wait for this. Guys, I just want to go over briefly on US32 real quick before we get to these charts. I want to talk about yesterday's trade where I got stopped out. I just want to go back and show you guys right here where I marked it up, the review of the sell. Just want to let you guys know my bias. My bias was selling yesterday, okay? But you see right here, this was 925, 930, and then 935, and then I went in at 940 where I took my trade. It went into just 30 pips of profit. It dropped on that wick, but I was looking for it to maybe close below here and transition on the 945 candle and continue push down. So when it came up, I had my stop loss just above like these bodies right here, and that's where I got stopped out on that blue candle, and then it came back down, and again I entered in one more sell right there, but you see how it didn't break, and then it came back up, then I got stopped out. But had I looked, like I had my stop right there, so it was a little tight. I should have, now looking back, looked at the 925 bearish candle that closed below the structure and identified 50% right there, and maybe just had my stop above there at 45,700. I know it's a bigger stop than I normally use, but this is Wall Street market open, so it's a little bit more volatile. That's when I should have reduced my sizing and made up for the stop loss. And then eventually you start to see it came back up, kind of made the resistance like right here, and then pushed back down. This was after the call 1025. Then right there 1030 is when they redistributed it to the downside. So I had a bearish bias, but you see it just didn't break down at that moment there. It came back up and then, you know, still held below and pushed back down and redistributed all the way down. So I looked back at this later in the evening and said, what could I have done better? It's not changing my bias. Like, I don't want to be too hard on myself. I had the bias of selling, so I don't want to change that because I was correct on the overall bias. It was just a shitty placement on my stop loss. I placed it too tight into here. I should have been at that 925 candle. I was focused keeping my stop like with Wall Street market open 930, and I failed to look at the 925 candle where right there. I should have had it above that point of interest right over there. So that was my mistake. You know, we got to learn from mistakes. That's part of trading. We got to own up to it when we make mistakes and not just blame the markets. It's just go review. What could we have done better? That's how I learn in trading. It's always, what could I have done better? Was it my bias that was wrong? No, the bias was correct. It was just maybe I placed my stop loss in an incorrect position. That's, you know, when I look back at it. So that's how you live and you learn in trading, okay? And don't be too hard on yourself. If you take a loss, you can always go back and learn from it. You got to review. I still to this day, there's a lot of traders that trade and they win or they lose, but they don't review. They don't review. They just pack it in, whether they have a losing day or a winning day, and they're done, but no review. So if that's what you do, that's fine. It's not what I do. What I do is I always review. That's how I learn, and then I can get better. So I'm thinking now today, if I'm trading Wall Street, I got to focus maybe on more structure. If I do place a larger than normal stop loss, then I got to decrease my position sizing, okay? So I'm already utilizing what I learned from yesterday going into today's Wall Street. So guys, that's just me, but I got to explain. Wins, I break them down to you. Losses, I got to break down to you. And also break evens, I got to break down to you. It's all part of the game of trading. Okay, so gold is continuing to break down. You see, guys, how it came up, that big bullish candle came up, lower high, rejected back down, and the volume closed back below that red line, and we're still below this dotted line right here on this parallel channel coming down. So let's see if sellers can continue to push it down to this lowest point of the day. But it could also be building right above the lowest point of the day too. Oh, sorry, guys, I didn't add the daily bar indicator on the futures, but there it is. Okay, so we got our daily bar indicator, opening price, high, low, and where we are right now. If you want me to add EMAs, we got an EMA 9 and an EMA 200 up here. We have an SST sell at 36.20 up here. Okay, so when it broke right there, 36.20 running to 15, that's 50 pips, but right now retracing. So just going over here, guys, on our Discord signals and trade ideas. Okay, on the indices, this was the long on US 30 yesterday. So you can use these as static levels too. We're looking for buys above 483. Right there, when it moves up, you know, you could have an alert, comes back down to 483, bounces off of it. You could go back into a buy, stop loss, and then it starts to break up to 600. So pretty good move right there, 100 plus pips. And right now on commodities, yeah, we do got some news on gold, crude oil, silver, and looking for right here, the break of that 36.20, which we just saw. And now it's running right here. 36.20 is right here. So we got that bearish candle pushing down. Again, for traders that are waiting for a pullback to 36.20, again, we could be waiting for it to come back up and go back down. But right now, still producing lower highs right here below this 36.17, which could continue to push down. Okay, so let's see. Right now, we've got the futures pushing down. We're at the bottom of that hourly parallel channel and very close to the lowest point of the day. Is there an issue with the trading view, the futures numbers? I don't subscribe to the futures like pay because I don't trade the futures, but is that the issue? Oh, there's a delay of 10 minutes. Okay. If we start to get more into the futures, guys, we'll upgrade to have the live data feed for you guys. I'm sorry. I'm being honest with you guys. I trade spot. Okay. So I don't trade futures. But if we do start getting more into trading the futures, GC, NQ, YM, we'll upgrade, no problem for you guys. So we'll have the real-time data, okay? Today was just a trial. I just wanted to see if you guys enjoyed this. I just want your feedback. But if everything is a go, we'll upgrade it, no problem. Okay, so... We'll take care of that, okay? So, guys, do you guys want me to get rid of this futures chart since there is a delay? I don't want it to throw you guys off. We can continue to watch spot. Take it off? Okay, no problem, guys. But thanks for pointing that out, okay? We'll take care of that because I want to get more into charting NQ, YM, ES, GC. So we'll upgrade everything on TradingView for you guys. Thanks for pointing that out, guys. You can tell I don't trade futures, prop firms, or futures. I trade more spot and stock and options, and but we'll take care of all of that. Okay. So guys, we're going into 8 a.m. You know, if you're in a trade right now, we have an hourly candle coming up. Okay, so let's watch how they close out this 5-minute candle. So it did come all the way down into here, is just a little bit above that lowest point of the day. So they are building a little bit of support, bringing it back up. But again, you know, it still could be a lower high, and then they push it back down. But let's see how it builds here. Okay, so we're going into 8 a.m. Then we got COMEX at 8:20, and then the big CPI news. And then we'll stick with everything till about, I would say about 8:50, and then we'll start to move over to NASDAQ and US30. Do you guys want me to get one out of the way right now? Do you guys want me to do NASDAQ or US30? We can get one out of the way. NASDAQ red? Okay, no problem. Guys, if you guys don't mind, I'm going to do NASDAQ. Do you want me to finish with gold until 8 a.m. and then we can do NASDAQ right away? Or let's just wait for this body to close, see where it closes on gold going into 8 a.m. And then I'll do NASDAQ top down. And then going into 9 a.m. we'll do US30, and then we'll bring them both together for Wall Street, okay? Okay, this is where we got that SST sell idea at this 620, okay? So if you guys are managing it, right, we came down, we created that lower low, but there is a little bit of bounce. It is in a strong demand area, in the lowest point of the day. So, you know, there's always going to be buyers, okay? When I'm selling into it, could be always, but it could be a pullback, right? It could drop, come down, and go back down. Absolutely it could. But it is building right now. Okay, so it came back up, good bearish candle coming down. It's going to close in 60 seconds. So let's see if the sellers can close it back below that red line, and one more push down at 8 a.m. It's a good push, okay? Beautiful, good push right up there, right near that 9 EMA at the top of the green box. Sellers are there protecting it, pushing it down. We're going to close in the next 40 seconds, okay? So we can kind of watch the closure here. Do you guys want me to get rid of this green zone? Is it throwing you guys off? I use it for myself to know that we're in a higher time frame area of demand. We're selling into it near the lowest point of the day. If it throws you guys off, I can remove this, no problem. You guys let me know on Zoom. Does this bother you guys? Does it throw you guys off? I place it for a particular reason for myself, but for you guys, if it's confusing you, you guys let me know. It's all good? Okay. Okay, so let's look. The body closed below, again, that red line. It opened, that's the 8 a.m. switch up. Okay, very strong bullish. But we still have 50% of this big bearish candle. Like, you can see that volatility. I know it sucks, believe me. Sometimes I'm in sells before an hourly candle, or I'm in buys and then it comes down, okay? So this is normal, guys. Get used to this. If you're in a trade prior to an hourly candle opening up, it happens, okay? You know, sometimes we don't have control over this when you're in a trade going into the hour, okay? But now we got to watch. Will the sellers kind of absorb and keep offering to push this thing down? Very bullish coming in. You know, that's where was the original trade idea. So it came in to about 50% of this candle so far. You can see the rejection. So can the sellers continue to offer, push this big, impulsive, strong candle? So you see they're still there. They offer to all of those buyers early. That would be good if you get them out of the way early and they flip this candle. It could be a nice bearish move coming down. So you see that, guys? Sometimes don't panic. Sometimes when you see that, right? It's a reason why the market does that, because it liquidated a lot of orders up here, and then we have offers coming down into the market. But we got to flip this candle, right? You know, it opens very strong. So it came deep down in there, and it's like, I tell you guys, like a rocket, it's refueling itself and coming back up. So the seller's got to continue to be there, offering, and continue to push this thing down. However, if this bar with the buyers that are continuing to ask up here and it closes above this green zone, then it could continue to build off of this and fill that wick and come back to 620 and maybe go a little higher, okay? And it's a 5-minute candle. So you can't always judge a candle on the first 1 minute, right? If you're trading a 5-minute candle. Okay, but guys, if you guys can watch this, I'm just going to go quickly, do a top-down analysis, 5 minutes on US30, and so that we can get ready for 815 news, 820, and CPI on gold, okay? So really quickly, guys, I'm going to do US30 on the top-down analysis. I'm going to go a little faster than usual because some of you guys are now here daily, and you guys are starting to get the hang of things of what I do. So you see, I'm always still marking this previous all-time high, double top supply, came in third time, fourth time, rejected. That was Powell's candle. Like when you're doing this every single day, it's going to become very routine. You know exactly what these candles represent. And that was the Friday, August 22. That was the Jackson Hole Symposium day 2 when Powell hinted that he was a little bit of he was speaking dovish, that there could be possible rate cuts coming in the near future, and market rallied and closed above. So that's why I flipped that zone. Now we can see how US30 is trading up here. Look, it's basically barcoding: bullish, bearish, bullish, bearish, bullish, bearish, bullish, bearish, bullish. But it is on a little bit of an uptrend. Like if you connect the dots, this wick, these wicks, you know, if you stay with the wicks in this situation, you stay with the wicks, it is moving up. So I look on the daily, that's a yellow line on the daily, that's the daily trend. Do I have an all-time high area to look at? Yes, we do have an all-time high. All-time high is right up here. Okay, so just going to go orange for the all-time high again. And again, where's my red zone? Okay, so same thing. All-time high, orange line to the bodies right there. Sometimes it takes 2 bodies to identify a zone. How many times have I said this? Right there, just to the body and then go into the future. That daily candle wick traded in there, rejected out of there. That one came in there, rejected back out of there. That one came in there, back down. That one came in there, closed again, right at those bodies. Yesterday we came in there, we hit the all-time high and rejected all the way and closed back below there. So this is still a red zone going into today, tomorrow, next week, next month, next year. Stretch it into the future, okay? Now let's kind of base our analysis off of, you know, that Powell's daily candle, very strong candle. Can we find the point of control of that candle, or just 50% of it? So if you can't guess where it is, grab your Fibonacci, open, close, 50%, 0.5 right there. Let's have a daily yellow line just to let us know if it ever comes down there, okay? So now I can see we are kind of ascending. We're moving up. We created a new all-time high, pulled back. Let's follow yesterday's volume. Again, guys, you see this green zone? It's green for a reason. Real quick, little review really fast. If I want to find exactly 50% of that, again, the size of the zone is determined for a specific reason. There's my 0.5, and I can see right there on that day, Tuesday, September 2nd, the day after the U.S. Bank were closed and the Memorial Day, it came Labor Day, it came in there and hit that and right back up. Came back down, see the trend line, still in that green zone, going back up. So guys, when you determine the size of your zone, I could do the same thing for this red zone. It's red for a reason. I could identify a nice 50% line right in this red zone, same way. The zone is determined for a particular reason. I'm not guessing the size of the zone, so let's just keep everything statistical, mathematics, very analytic. There's 50%. and I got a point of interest. If we do trade back in there, that's where it could possibly get rejected, okay? So, sorry guys, I'm gonna go a little faster now. Now I start to see how the volume is moving. Start the week, it opened, higher low, closed up above there. We pulled back, higher low, continue come up in the red zone, rejected, closed right there. Yesterday, bullish, came in, all-time high, pushed it back down, all the way down there, still a higher low, but notice there, I've got a body and a wick. So let's place a yellow line right here for reference. And we hit yesterday's low of the day right there. We came back up, we closed. How did we close? How did we open today? Clean transition, no gaps in the markets. Right there, close, open. Today was initially real quick, was bearish. There's our wick. So I can tell it's not an ignited daily candle. There was a little bit of drawdown in today, but it is a higher low. We came back to the opening price. We pushed all the way back up. There's our high today. And there's a little bit of rejection coming back down. We still have bullish volume, so we'll see, will it continue to drive to the highest point of the day and drive up to right here, the top of the red box, or the bottom of the red box. Do you need to have a line there? When I'm trading myself, I don't place a line there because I know why I chose that zone for a specific reason. But for you guys, I place a line there. So you guys know, so you're learning. Why is there a yellow line there? Because a body closed on a daily, a body opened on the daily. Right here, a body closed on the daily, a body opened on the daily. This area, 45,655, is a very important area, okay? So are we gonna come all the way back up there? If we can, maybe we'll break out to that yellow line and then maybe to the all-time high. Maybe it's a lower high and they're gonna continue to push down. So one other thing I do is I wanna know where 50% of this current point of control volume is. I know it's moving, so I'm not gonna be as accurate, but there's the opening price. I can see it right there. It's moving. I'm trying to get it where it is. And 0.5 of the actual volume right there is right there. I know it's not closed, but if we do pull back, maybe that's where it's building its point of control, okay? So I'm going to go off of the daily candles now. I can see that they are kind of barcoding, you know, they are very choppy, but they are still ascending and getting up, maybe to clear that all-time high and keep moving up, or it's going to start coming back down, okay? On the 4 hour, let's go into the 4 hour real quick. We can start to see it came up, back down, came up, kind of like a double top, back down, but didn't really break. Now we're barcoding our way back up on the 4 hours. So it came in here, bullish, back down, bearish. Here's Europe, 2 to 6 a.m., bullish engulfing, right? So that yellow line now is representing 50% of European volume at 45,525. Notice the bar, we closed right at the high, short wick. We had a 4 hour open, pop that wick and continue to fill, which created our highest point of the day, and now we're getting rejected still with this volume. So if we lose our 4 hour volume, it could come back down to here. So you see here, I'm looking at my 4 hour point of interest, where we closed, where we opened. I'm going to place a white line right here to let me know that that's my hourly support right now, still holding the market up. If we lose this, then we could sell off down to this yellow line. If we lose this yellow line, it could sell off all the way back down to our opening price, and there's our low of the day. Also, we do have a lot of rejections in the red zone pushing the market down, okay? So this could be another lower high and they push it back down. However, if we break this, we could continue to go. On the hourly, okay? So you can see we had the big move yesterday, right over here, Wednesday, 9 a.m., 10 a.m. I was bearish. I had a bearish bias. Guys, I explained it, but I got caught on those wicks. I had a bad stop loss placement. I admit it, you know, but I learned from it, okay? So, but the bearish sentiment was correct. It came down. Now I can see it came down, back up, came down, back up, came down. See where the volume is still above this purple line? Those are impulse breaks, not breaking that. And then we're slowly coming up, back down, higher low, coming right back up. So now our hourly candles, there's our hourly support, that 4 hour white line, hourly. There's our high of the day. We are now consolidating. Are we going to continue to break out for the new high of the day, or are they going to kind of retrace it back down and we're going to test this yellow line or back down into here, okay? And this area, the highest point of the day, is a very important area, like right here. If I go again to those bodies, see, I'm utilizing the bodies, that body, the purple line, continue to go in now, go in to the future. And then you see now I can just drop it down to those 2 hourly bodies right there. Okay, so you see how I have a little bit above the purple line, a little bit below. So if the hourly comes in here, you know, we could get faked out to buy and then they drop it down on us. So maybe we got to watch to see if we can clear this close above, retest this, then drive back up there, okay? Because there is still selling pressure there. That's our zone. So we got to watch that. So on the 5 minutes, looking at here really fast, you can see the 5 minute candles are driving really nice, right in there, pulled down, came back up. The highest point of the day is right there, and pushing back down now. So we got to watch and see right there, the hourly. See that bearish candle, how it closed right there and open with a bullish ignited candle. So if we get sellers closing below here, we could get that next extension leg pushing back down from the yellow to the from the white to the yellow. Again, I'm not guessing, so let's measure it so we know. If we do go into a sell and it comes down there, that would be approximately 35 pips. I know it's not what everyone's looking for, but it's not up to me, right? That's just the zone of interest, right? If it continues to break down to the next zone, yeah, you could grab 80 pips, and until the lowest point of the day could be 100, right? But we got to take it from one level to the next level. Even if it holds and it goes back up in a buy, where could it go up? Like if the white line holds support and it comes back up, I would be looking at that red line right there. That's about 25, 30 pips. And then obviously the highest point of the day is 40. If it could break up to there, yeah, we could grab 60. But you got to kind of just look at this. Right now on the 5 minutes, I see that there was one pivot point right here. So this is where I draw my my cut line, like my red line, and I can see it pivoted, came back up. We just closed below it, but now the buyers closed above and came back down, and now it's going right back up like a hammer candle. So this is what we got to be watching for later on, okay? So I'm just going to leave US 30. Let's add our daily bar indicator so I can see now very bullish. There's our opening price, small pullback to the low, came filled all the way to the highest point of the day right there. Just happened, 710. And now just this little leg coming back down is representing the daily wick, but we still have strong daily volume that could bring this thing back up, okay? And this yellow line is 50% of today's current bullish volume, okay? It's just so you know what that yellow line represents right there. And you can see 5 minutes are holding good support at that level, like right there, yellow line. Capture the bodies, capture everything, make it green, stretch in the future. You see how you got the bodies, wick, stretch into the future. If it comes down here, this would be an optimal area to look for a buy. I'm going to place a signal there at that yellow line, add an alert, yes, create, perfect. So, like if it sells off all the way down in there, this is too if we're in a sell too. If you're in a sell, and that's why, if it comes down to that yellow line, we got to do something. We could grab our 30, 35, 40 pips, but if it comes in here, there could be buyers that want to just buy that right back up and go right back up. So if you're selling, you got to understand what you're also selling into, okay? And if you're buying, maybe wait patiently down in there, okay? Will it come down there? I don't know, right? It could just hold support here and continue driving. So that's US 30. We'll revisit this in a bit, okay? So we got that out of the way. We'll do NASDAQ later on. We got to go back to gold. And so our sell idea right there, if you had a break even, kind of came to the break even. But now we got to watch. Now we got to get ready for news coming up. 8:15, we do have the European news coming in the market. So we'll cause a little bit of volatility right now. The main refinancing rate will be in 55 seconds in Europe, and then 8:20 COMEX, and then 8:30 the big US news. So please guys, if you're in any trades right now, just expect volatility in the next 15-20 minutes, okay? It's going to get a little bit crazy. So please guys, if you're in any trades, monitor your trades. If you're looking to take a trade, what is your plan? How much are you allocating? Are you going to give it more room to breathe? Are you going to go with a feeler trade, test the waters, get your feet wet, whether you want to buy, whether you want to sell? Do you want to just see how things are moving without, doing something crazy? All of these things. Or are you going to wait for bodies to physically close and be more patient, be more disciplined? Yes, you might miss out on an impulse move, but again, traders that are patient and disciplined, they don't care about impulse moves, right? If you're a disciplined trader and you're very patient, impulse shouldn't even be in your category of conversation, right? There's no impulse move if you're waiting for bodies to close. You're physically waiting for the body to close. So yes, you'll watch a candle go up. You might watch a candle go down. You might watch a candle with a big wick or a small wick, but you are waiting for your physical time frame to close. There's traders on the call that are waiting for an hourly candle to close in the next 45 minutes. There's 30-minute traders that are waiting for another 15 minutes for the 30-minute candle close. There's 15-minute traders that are going to wait till the 15-minute candle closes. There's 5-minute traders that wait for the full 5 minutes. There's 1-minute traders that wait for the full complete 1 minute, okay? So you pick what's best for you, okay? Now we see, again, coming back up to that resistance point, getting rejected back down. We don't have buyers closing above here as of yet. But remember, with news, this could spike out, no problems, okay? One question I want to ask everyone in this group. Are you guys getting a little bit better, a little bit more disciplined with impulse trading? If you're still working on it, I understand. It's not easy to conquer it and overcome it. But the way how I told myself is just wait for the damn candle to close. I don't give a shit how high it goes, how low it goes. I'm waiting for it to close. Because if you close and it closes with a big body or a small body, then you can at least figure out the point of control and maybe catch a pullback. Okay, so here we go. Breaking news, ECB deposit rate actual 2%. So they decreased from the 2.15. So it's a decrease of 0.15 points. So it's pretty in line with the US to drop. Okay. Okay, so right now gold is dropping right now. Okay, US dollar is moving up right now. Okay, US dollar is bullish right now. Okay, so gold again came back to our entry point, 620, dropping back down. Let's see if this bear candle can close. Remember, we got supporting levels down in the green zone. Will it close below here? Will it just come down in here, tag a few buyers, and come right back up? So you can see we are holding a little bit of, still resistance right here. We're going to follow this volume going into COMEX. We're going to follow it into the news. So just bear with me, guys. Okay? If you're here to gamble, I don't suggest it, but I'm not here to tell you what to do. Okay? If you want to gamble, you're gambling your money. You're gambling your account. Okay? We're all adults here. I've finally realized here, that's what's helping me on YouTube. We should be all adults here. Okay? I'm not like someone here to tell you what to do. I'm an adult myself. You guys are all adults. If you want to over leverage, you want to gamble, it's not my money. I'm not a financial advisor. I got nothing to do with that. Okay? Hopefully, some of us are learning proper risk management because we want to trade for multiple years in the markets and do this consistently and maybe have supplemental income for ourselves and our family. But if you're gambling, it's on you, right? I hope no one is gambling, but I can't stop that. We got 800 viewers, and I'm sure that some of you guys are gambling on here. Okay, and US30 and NASDAQ still barcoding. We'll revisit those later on. Right now, gold is in the spotlight, okay? So you see it came down bearish. Again, in that green zone, caught a wick coming right back up. So it's a bullish pin bar candle coming right back in here. Will it close above and continue to move to our upper trend line? And then to the bigger red zone back up here. Because there's where I have a yellow line. Okay, yellow line is much stronger than just this 5-minute point of interest right over here. So that's at 3,624. Okay, so we'll watch that going into COMEX and the news. Guys, if we can hit the likes before COMEX, we're at 364 likes and we have 830 viewers on here. So, just 50%, okay? Can we get it up to 415, maybe specifically 420 likes? And that's exactly just above 50% on the likes, okay? We're going to go into COMEX and high intense news. So let's get those likes up. Subscribe to the channel if it's your first time here. Let's get this to 85K. 8 more subs away. I'm sure out of those 800 people, 8 of you guys are not subbed to the channel. Hit that sub button. Join us on a daily basis. And learn and earn with the SST team. Okay, so we've got a bullish ignited candle breaking out of here. Okay, so again, 820. This is now COMEX market open. Okay, so now you've got the commodities channel, commodities exchange opening up. Okay, so this is volume coming in from the COMEX. right? It's showing bullish. So we broke down as far down into here in this bigger, deeper demand area. So that I see that they're protecting the lowest point of the day right now. So what I do is I notice how they're protecting it and go back to my lowest point of the day, and I start with another green zone. So if it comes back down in here, if it sells all the way back down, I got to know that this is where they could be protecting the lowest point of the day, okay? So big bullish ignited candle breaking out of here, okay? So where will it close? How will it close? I am not in a current trade right now, okay? So I'm waiting to see how high, how low things go, where bodies close. This is COMEX, and then we got 9 minutes from now, we got that US high intense folders. So are they driving gold up to liquidate some positions up here and then maybe drop it back down? That could be a possibility. Let's watch how they orchestrate a move too. We're watching a live engineering right now. This is live engineering, okay? Markets are performed by engineers. Some of you guys go to school. Some of you guys are civil engineers, mechanical engineers, computer engineers, mathematical engineers. We have financial engineers. Okay, I know it's not a degree that we get at university, but it's something taught behind the scenes. So we're learning how to be financial engineers ourselves. How many of you guys want to learn a financial engineering education? We'll give you an SST certificate. I'll license you guys. I will personally license you guys, okay? I will personally. I can say that I'm a self-taught financial engineer, price action engineer, and I know a little bit about this stuff. Yes, I don't have the credential from a university. I have more my economics finance degree from university, but I will personally acknowledge you guys as financial engineers. But let's watch what they are doing, the market engineers. Okay, this is engineering a move. They're engineering liquidity right before us during COMEX. So it's a strong bullish ignited candle. Now let's watch. We're at that overall hourly trend line and to the bigger red zone. Okay, so this is the actual neckline. This was just an inverted block in the market right here. This is just a small block, inversion block, whatever you guys call it, breaker blocks, inversion block. I don't even know what you guys call it anymore, okay? I'm so confused with what you guys call it. But number one, look at this. Just a typical pattern. Came down to the lowest point of the day, right there, a bottom. There's our big neckline, the big red box. Now it came back down. There's a double bottom that they already brought up, and now it's breaking out with COMEX. Here it is. Like, this is a double top. Will it break above here, come back down into here? We flip that green, and gold is driving back up. Or are they going to now fake out the buyers, impulse buyers up here, fake them out, and drop it back down? Okay, so this block, I'm going to assume that this candle is going to close above here in 1 minute. So this block, I'm going to turn green. This is just a block inside. This one I place more emphasis on because my daily line is right here, my daily point of interest. Okay, so you see it's a beautiful double bottom coming right back up. US dollar is selling. Okay, so where will this thing close? Okay, so this is an impulse move now, impulsively breaking out of this red zone. There is a rejection, closing in 20 seconds. So if it does close above here, I'm just going through my motions. I'm going to make the red box green. If it still closes inside here, it's still a red zone. And then we're moving into the high intense news, okay? So this is still COMEX, but this is going to close the first 5 minutes of COMEX right here. Okay, so it did close. Look, it did get rejected. Look where it closed. Right at our yellow daily point of interest, and it opened bearish ignited and just dropped, okay? But it picked up a wick. Where's now 50% of this big bullish candle? Let's cut it right now, okay, right there. So that's 50%, and we have a buyer's block down there and a bigger block down here. So it did nothing closed above here, okay? It just impulsively came out of here, and it opened ignited bearish and coming right back down, okay? So this block is still holding with sellers now, okay? So maybe they liquidated a few orders up here, and now they're coming right back down. Let's see, will it respect this? Will it respect this? Will it come back up? Will it close? And then we'll see how it will trade going into the news, okay? We're going to follow this candle by candle. I'm not in a trade. I'm not even in a feeler trade. I'm not testing nothing right now. I'm just analyzing all of the blocks, see what they are engineering. There's nothing wrong with trading after the news. Nothing wrong with that. You guys don't need to get into this right now if you don't feel comfortable. There's a lot going on in the markets right now. There's a lot going on. You just had the European refinancing numbers come in. We just had COMEX market open, and then we've got 4 back-to-back high-impact U.S. folders. We got core CPI, regular CPI, yearly CPI, and our weekly unemployment claims. So there's a shit ton of news coming up right now, okay? So lots coming up in 3.5 minutes. So please be careful, guys. Okay, so you see how the red block held up? Okay, so if you were a buyer, you know you're transacting in a red block. That's where you could, you know, take some profit out of the market. There's nothing wrong with taking out some money when you enter these zones, okay? Now we came down, remember that candle open bearish ignited. See how they closed it right at that yellow line? They brought it down bearish, 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 bearish. We just broke a, that's where I cut it in half, 50%. But remember, a little bit above, a little bit below is the point of control. So it did come in a little lower point of control, got a wick coming back up. So this is a hanging man candle. Will it continue with the bearish volume come back down, or are buyers going to continue to push this thing and ask to trade back above here and maybe break this thing out bullish with the news, okay? And the US dollar is coming back down. Yes, some prop firms don't let you trade news. So if you're not allowed to trade news, you can't trade news. Maybe it's better that way. Maybe they're trying to teach you guys a little bit of risk management to not trade news. Okay, there's nothing wrong with that. But if you choose a prop firm that allows you to trade news, that's your own personal preference. Maybe these prop firms are looking out for you. I don't know. Maybe they don't want you to blow up your accounts. I don't know. I don't trade with a prop firm anymore. Maybe I should see what it feels like again to trade with a prop firm. Okay, so 90 seconds to go into the news, guys. Be prepared for volatility. Be prepared for maybe some whipsaw action. But don't be surprised. Remember yesterday we had a big bullish candle right out of the gate, ignited and just drove. You could see the opposite today. You could see a big bearish candle just drive back down. Okay, you could see candles that go up and get a wick and go back down. You might see a bearish candle go down, get a wick going back up. But I'm waiting for the full 5-minute close to determine anything. I'm making that clear to everybody. If you want to unsubscribe from the channel and go to another channel, go. I'm telling you guys what I'm doing. Reese, if I bought 20 Apex accounts, you would absolutely clean up. Maybe we should buy accounts together and have like a house SST trading account where we can trade it together and we divide all the winnings to everybody. Profit sharing. You know, it's exactly like how publicly traded companies do. Why don't we have profit sharing? We win, we lose, we all eat together. Yeah, maybe we should consider it. Okay, here we go, guys. 15 seconds. Remember, it still has not lost its ignited bearish open. Okay, so that's important. Let's continue to watch this. 5 seconds. Good luck, everyone. Please trade careful. That's all I can say. Okay, it opened bearish, bullish, rejection, dump. Oh, wow. What a... See how they set that shit up? They came all the way up there. They dumped it all the way down. Now it's whipsaw action. That's why you don't want to trade this shit. Look how crazy it is right now. Wow. So they liquidated everybody down here. Now it could pump to the upside. Yes, that's a good setup if you want to take a scalp up, but that's not what I want to do. I'm waiting for it to close. Wow. Okay, you see how they liquidated everything, swept the lowest point, purple line, drove it back up and bullish. If you guys are learning right now what are liquidity sweeps, there it is. So now we got to wait for this body to close, and maybe we'll find an inverted block down in here for a pullback. Okay, so let's just see what the numbers are. Holy shit. Okay. Oh, core CPI month over month 0.3, no change. CPI month over month increasing. Okay. Year over year CPI 2.9 above last year at forecast. Unemployment claims, holy shit, week over week unemployment claims 263,000 red. That's like 30,000 above the forecast, guys. Wow. Oh my goodness. US is struggling. Okay. The US dollar is dumping right now. Unemployment is increasing week over week, and our job numbers came out that they're not creating any jobs. I feel for everyone in America. Okay. They are my neighbors, and I do have relatives and best friends down there. And man, Canada's same shit like you guys, okay? So Canada is even worse than you guys. Europe is worse than all of us, okay? So this is global. This is not just US. It's just the markets trade against the US dollar. Wow, okay? So this could continue to see gold moving up. Maybe we got to look to buy pullbacks now, okay? So let's stay focused. Let's see how high this bullish candle is going to break to. It just broke that 4-hour resistance. We're above the 200 EMA. There's our next daily position. That's the opening price today, 36.40. Oh my God. Holy, but okay, so to my engineers that are here, you see how they brought the price up and then, you know, kind of hung out in that red box. As soon as it opened, bearish, took out everything, all the liquidity, swept it, took out the low, came back. That's a position I love to scalp. You guys know me. If I was on the 1 minutes, I probably would have bought that breakout. But I specifically said I'm waiting for a 5-minute candle to close. But sometimes when I see that on the 1 minutes, right there, so easy to read that. That 1 minute candle, 8:30, opened bearish, took out the low, came back up right there. Sometimes when you're scalping that little pop, you could grab like 50, 60, 100 pips. Holy shit. 1 minute candles haven't even retraced back down yet. Man, this is crazy. Okay, so we got to wait for this candle to close. Again, I could look for a pullback buy here. I'm going to assume it's going to close above this red zone. So I'm making that green. That's the deep pullback. If I can get in there, I'm just cleaning up, getting rid of that red line. Unnecessary. This green box, unnecessary. So you see our bigger green box held up, guys. That's why it's not, you got to understand where you're trading. Okay. Those sells are good down there. That came down, but held up, liquidity grab, took it out, popped. Okay, so we just now tapped yellow line, opening position. You know when I say something, if you're in a buy, nudge, do something, right there to the yellow line. Okay, that's yellow to yellow tape. That's a nice fill. Okay, from 625 to 640, that's 150 pips right up to the white line, yellow line. Guys, zone to zone trading, line to line, reading the tape. I know it's a dinosaur method of trading, but it's accurate as fuck. If you want me to talk in your language, it is literally keeps you really disciplined. Look at where, you know, just watch, guys. Like here. They opened it. This is for study purposes. Took out the low. Look at that. Yellow line where it grabbed the wick. You guys know we did this analysis 2 hours ago. It perfectly played out there. Drove right up to the next yellow line. Now let's watch the close. Wow. Okay, so right now, I want to find 50% of this candle. I'm getting my fib ready as soon as it closes. Where's the close? 18 seconds. See how I'm just following it with my fib, waiting for the volume to naturally close? Because I want to know where 50% is. It might be exactly that white line. Watch, guys. Okay, here's the close in 5, 4, 3, 2, 1, close. 50%. Okay, so I'm going to now adjust my white line to 0.5 right there, draw a bullish point of control, maybe for us to maybe entertain a pullback buy. okay? Or just realize that pending orders are pending in here. And you see, if I would get a pullback buy, I'm buying at the 200 EMA and that white 4-hour line that could be support right now, okay? So naturally, I want to wait for a pullback in here and maybe get a discounted buy to take it back up and drive, right? But it might not come back down here. It might still have fuel to break out of here. So now you got to ask yourself, do you want to continue to trade without getting the pullback? Maybe I will. Okay. So, and this will be an impulse trade, right? So I see it's holding. It's a doji candle, continue build. If it breaks out of here, we could attempt to grab that purple high of the day. Get ready. I might take this as an impulse candle and place my stop loss below this zone and maybe add a position if it comes back down there. Okay. Get ready. This is where the candle bar can flip on the daily and just fill back up to its daily wick. Okay, you see how it's right there. It's just waiting. It's waiting. It's waiting. Okay, it's there. Just got to kind of pull the trigger. Now it broke. Now I want one little quick pullback. One little wick pull back for one more reload. Man, did I miss it? Let's see if it comes back down. One more reload. You know, when it comes back, it's like a rocket fueling up. I missed it. So I don't want to take it now. See, I had my opportunity to scalp that. I didn't. Okay, shit. I got a little too cute there. I was waiting for that little pullback. Now I think I missed out on it. So I don't want to buy the highest point right now. Damn, I missed that. That would have been a quick little scalp right there. That's 30 pips. I missed it. I admit it. I fucked up. That's why I like, watching the 1 minutes right there. You see those 1 minutes right there. Build, break. Oh, and that would have been a nice 30, 40 pip move. Oh, man. So now I don't want to buy that high. I want to wait for pullback, okay? I missed out. I told you guys, I missed out. As soon as it broke out, I was waiting for that wick just to pull back just a little bit and come to me and then go back up. I missed it. I had to pull the trigger. I did it. Reese, we need to watch 1 minute, and I will. We'll do 1 minute during news, but it is crazy. It is intense. Like we'll do it, okay? But yeah, that was nice read on the 1 minute. Sometimes the 1 minute candles are clearer to see than the 5 minutes. But I don't want to say that because I don't want to put everyone on the 1 minutes. And then, because 1 minutes you got to know what you're doing with them. You honestly have to know what you're doing with them. You have to be extremely disciplined with them. And you got to know exactly what you're looking for. Okay, so this is a strong bullish move. We have just a shallow retracement right there. Like if I just show our retracement, it's only right there, okay? So there's still a lot of buyers waiting in here. Look at now the EMA 9 could be creeping up there, could be doing a bullish crossover. Are we going to get that? Now it came up, okay? So it did come up all the way up there. Now getting rejected back down. But now we have a minute and 18 seconds to go. So now I'm going to wait for the candle to close. That was just that impulse break. If you grabbed it on that 1 minute candle, it was good for 40 up to 44. That's 40 pips. But you had to pip and dip. That's what I would have done on that. If I was in that, I guarantee you would have heard me say, I'm closing out 80%, leaving 20% running. Now it's a shooting star candle coming back down to the lowest point. Let's see if it breaks and it comes deeper down into here. Remember, that's where those fish could be, right? All those pending orders waiting in here. But remember, this one is much better. If we can buy down in here, that's optimal area. This one is just the point of control from the news that left all of these buyers still waiting, okay? So let's watch where this body closes. It's a spin top candle now. Where will it close, okay? We're still below the yellow daily line. We're still below the opening price, so it could come back down, but let's see what reaction will be in here. Do you guys want me to place a pending buy in here and show you guys how to use pending orders? I won't go big. I'll go like a 0.2, which is normal for me. But let me do it for you guys, okay? Just to show you guys to the pending buyers, okay? So I will have a pending buy at this white line. I'll place it right now, okay? So I'm pending in there. If it comes down there, I'll get filled. Now it's the only, I'll put a buy stop and I'll place my stop below this green zone, okay? And then if I get filled down in somewhere in here, then I'm looking to take it back up to that high and see if I can break out of it, maybe just a little bit, not to the purple line, just a new higher high, okay? So I'm gonna test that out, okay? This is for learning purposes, how to use a pending buy in the markets. Let me just put it in 1 second, and I'll also write right here so you guys know. Pending buy order, buy stop. Okay. I'm using a 0.2 risk, like 0.2%, okay, for me, right? It doesn't matter what you are, and I'm going to put in here, this is education, okay? This is education learning, okay? I'm not a financial advisor. Education. If you want to learn how to use pending orders at 50% of a block, right there, okay? We got that? Education. And yes, I could get stopped out and come down in there, but I'm testing all of that volume, which has not been tested into. Okay, so that volume closed below here, right? So there is a little bit of, there's resistance now. We're back below that yellow line. So will it come back down in here? Sorry, limit order, my bad, limit, you're right. But I'll also trade, like with market executions as well. I just want to leave that in there just to teach you guys, for those traders that want to use pending orders in the market, where to possibly put them, right? Okay, so let's get ready. We got a bearish candle coming down. Will it come down to our location where we're looking? And that location is right here, 3,630.31 area, the white line. And I'll tell you guys if I get activated. Remember, again, my broker is a little bit different than what you guys see on TradingView here, but I'll verbally tell you as soon as I get activated. Okay, so it's coming down. Oh, I hope they don't miss me, like come in here. Okay, it could come down to the top of the green box or right in here, okay? I'm still not activated yet. Okay, so it came to the top of the green box, got a wick, moving away. So, did I just get missed by a little bit because I placed it right at 50%, right? If I placed it right at the top of the green, I would be right in the money right now, but that's not where I placed it. So if you did, you could have gone up 20 pips, but it could also come all the way right back down and try one more push down, okay? So I was close, but not activated. Okay, now it might come back down, test that low. Will it break for a new lower low? And then that's where I'm waiting. Okay, I'll tell you exactly when I get activated. And I know it could activate me and continue going down lower, and maybe it will close below here and I'm activated, and then I make it red, and then that's it. I'm in drawdown, but I'm activated. That's why sometimes using pending orders, I like to personally use market executions when I'm trading live, when I'm watching everything, but I want to showcase for pending limit traders, like how you can pinpoint areas. Sometimes they work out, sometimes they don't. That's why I told you I'm not gambling, I'm not risking my entire account here. Oh man, I didn't get activated. I'm still waiting in here. It's close, but sometimes, that's why it's better sometimes when you place these, you're not looking at the charts, because you just walk away. And then sometimes it gets activated, you might be in profit or whatever, but oh man, I got missed by a few points. Oh my God. Fuck. That's why I hate these things. Are you kidding me? So it kind of missed me by, 10 pips. And now look at the return, up 40, 50. Oh my God, did anyone test this out? Man, I was right at 50% and got missed right there. See, my pending order is still active, sitting in the market. I'm one of these fish still waiting in here. Oh my God, Sergio. Fuck. Just by 10 pips right there, okay? I thought my broker was going to activate me. No, they didn't. Okay, and just like that, sometimes when, as a scalper, if you get activated and it goes up 40, 50 pips, you could close it right there and, and just grab your money and run. That's like a vulture in the markets, okay? But now it could come all the way back down, then maybe drop a lower low, activate me, but maybe even go even lower. So this is where I could cancel my pending order and move it maybe a little lower, okay? So you can do that too with pending orders. I could cancel it. That's how the depth of market moves. There's orders canceled, and then maybe I could place it at the bottom, get a better discounted buy in there, okay? But I'm going to keep it where it is. Now you see it's coming back down. Maybe it wants to pick up more pending orders. However, it could make a higher low and continue to go up. Then we're starting to see the depth of market, how it's building, right? Market is engineering a move. It could be coming down to grab these pending orders in order to take gold back up. But this block is also just representing the news. Remember, our bigger, higher time frame zone is down in here. It's much better to have an order deeper down in here. Okay, guys, now I'll let you know if I get activated. I got activated. I'm in now. So I'm in a buy now, okay? So I'm in. That activated me. 3631 on the dot, I got activated. Okay, so now when they activate you, there's 3 more minutes and it's a bearish bar coming down. So that's why sometimes, you know, you gotta be careful with these things, because now it's a bearish engulfing candle that could come down here, activated me, close below here, and continue dropping down. So now we got to see how it works this green zone now. That's why sometimes I like doing market executions, because if I'm following this candle and it closes below, I'm not buying. You know, see, now it sucks. The first one was a good one. This one is coming deeper. It could close below here. And then that's why I was saying, guys, that's a better opportunity down in there. That's why my stop loss is just below there, because I want to see if it will pick up any buyers down in here. If not, you know, I could get stopped out. But let's see if it can grab a higher low wick, come back up, trade inside here, build, and come back up. It's not very easy to use pending orders in the market. That's why you got to know how much risk you're placing with these things. Okay, so we're going to close in 2 more minutes. So it came down lower low down in there. It's got a wick coming back up. We're back in the green zone, you know. So will it close inside the green zone? Will it close back up here? Or will this bearish candle come all the way close below here? Then, unfortunately, while I'm in this active buy, I got to invert the zone red, and then it could push one more push down to the bigger zone. So we got a nice wick. It's right back to where I'm at, break even. Okay, but now we got to watch the close going into 90 seconds. Okay, so it would be nice if buyers can continue to ask and trade above 3632, 33, build off of this, and then maybe off of this momentum coming up, maybe our candle could open bullish and continue to drive back up. However, bearish are offering and continuing to offer down in here. So it's going to be the close of the candle in the next 60 seconds. NASDAQ and US30, wow, crazy volatility, okay? So US30 took out the highest point of the day on the news, came all the way back down into here, and possibly coming back up. We'll let the market do what it's doing right now. We'll revisit this later on at 9 and do our top down on NASDAQ and continue to watch this going into Wall Street. But let's see what gold is doing right over here. And this will be my cut line, this red line, to determine wherever this body closes, where 50% of it is. So I know where my ongoing resistance is with the current volume, okay? So I'm going to place this red line. I'm going to cut this black candle as soon as it closes. Right there, I'm determining that that's 50% from the open close right there. Again, it closed right where I'm activated. Okay, so now it's opening with a green candle, but buyers got to continue to ask to trade at this red line, 3634, in order to get it to push back up. So that's ongoing resistance. Okay, but now we're going to see if this green zone will start to develop as support to continue with the next leg to maybe possibly push back up, right? Okay, so initially, remember, open blue, came up, rejected, back down. So let's see if we can continue to build in this green zone. However, it's dropping. Did it take out that previous low wick? We've got a wick already. It is a higher low. So now can we come back up, or sellers are going to break this and drop down deeper down into here? And guys, just from this pending order, my stop loss is just below here. Okay, and I will verbally let you guys know as soon as I get stopped out. Okay, so came back down, new lower low, could definitely come back down. Okay, so you can see right now currently this block is showing more active sellers in here. So maybe this will be a better opportunity to get that deeper discounted buy. Okay, if it does come down here. Like, you could also utilize like pending orders as your feeler trades, testing out blocks, you know, without over risking, over leveraging. Then if it comes deeper, then maybe you could start to add your regular trading size. Okay, so you could also utilize in your trading strategy pending orders as feeler trades at specific locations in the market just to test out the zone. Okay, a lot of traders do that as well. To re-enter, you can re-enter, but I would wait for the body to close. Wait for the body to close. If you can be patient another two more minutes, I would recommend waiting for the body to close. Let's see if the buyers can, you know, come back to this white line where it's that point of interest on the 4-hour, hourly. Maybe if the volume can close back above here, bullish, and then get the next leg up. So yeah, there is a good return. There is a good return. It didn't come down in here. Good return. We're back in the green zone again. You know, I'm hovering around being break even again. Went into drawdown, coming right back to my opening position. 2 more minutes to go. Let's see if the buyers can flip this candle and then maybe next bar drive out of here, okay, and still respect this green zone. However, sellers could come back down and close below here, and then unfortunately I got to go green to red because it could momentarily show that it is an area of offers, sellers. Okay, so if you can wait out 90 more seconds. Let's see where this closes, because it might close bearish down here and you don't want to be in a buy because it could come down one more leg. And then if you are considering buy, maybe you could get a nice deeper discount down in here and you're closer to the yellow line where it's more of a daily point of interest. So you can buy with bigger buyers down in there, right? This is just representing the news, the first 5 minutes of the news, which left some buyers in the market that never got activated. Now it looks like they're all activated. You can see it came clean through here, but we're trading right back in it. So this is where the market is consolidating between the buyers and sellers at this point of control. Remember, the market will go 2 ways. It will either go up, go down, or just continue to trade and accumulate in this green zone. And right now it's still showing me buyers are interested. They're here, but sellers are very powerful in here as well. So now it's going to come down to the close of the candle. And you notice we're right back at that point of interest where I placed my order. Now we flipped the candle blue, so we turned into a pin bar. Now it's a bullish pin bar. We still have our upper wick. If we can get back up there and maybe close near the high, we can maybe turn it into a hammer and get ready to drive with our next body. So here's the close in 15 seconds. And we're getting close to going into 9 a.m., guys. So in the next 5 minutes, it's going to be 9 a.m. So, you know, there's going to be a little bit of volatility at 9 a.m. as well. hopefully it's in our direction if we're buying. Okay, so we close virtually right where we opened. You can it's a pin bar close virtually right where we open. Next bar again is opening bearish right now, but can we get again wicks, higher lows, build inside here. Okay, guys. So, you know, like if you're not liking the trade, again, it's in a little bit of drawdown. If you don't like the setup, you're welcome to, you know, close it out. Like that's what I do too. If I don't like the setup, if I see that the buyers are not showing strength, I might get out of it, but I'm still, you know, I'm still in the green zone, still giving it room to breathe. I held in this drawdown, so, you know, this candle doesn't scare me or anything, but if it does start to push back down in here, yes, because I got to watch this. I don't want to lose this zone down in here because then it can turn really bearish. So let's see now one more time. Can they pick up higher low and reverse this thing back up? I haven't used a pending order in years, okay? Live on YouTube and Zoom. So this is, you know, for education, guys, why it's here. But now you see, okay, so we got 3 big wicks, continue to come back up. We're still trading inside here. Buyers and sellers, buyers and sellers, buyers and sellers. We don't have a nice bullish candle closing above this green zone to give us that confirmation. That's where then maybe market executions can start to come into play. You know, I could definitely, if it's going in my direction, I could add now a market execution buy. Okay, so I'm testing everything out with my pending order, and then maybe if I get what I'm looking for, I could go into another potential position buy with a market execution. But we're going right into the 9 a.m. in 2.5 minutes. So that's what we got to be careful for. Because you guys know how they can engineer these markets on the new 1 hour. Like they could come down bearish, liquidate, you know, I'll get stopped, and then, you know, bring it right back up. Okay, that could definitely happen. That's why you don't want to risk too much, like, right? Is everyone doing good? 900 viewers. Thank you guys for joining. We're going to get to indices in a moment. Okay, so we're going to do NASDAQ and US30 soon and get ready for Wall Street. There's some news over here. Traders fully price in 3 Fed rate cuts by end of 2025. And here's President Lagarde from the ECB, you know, the press conference that started at 8:45. So this is the ECB, European Central Bank, Lagarde speaking over here on everything, you know, asking questions, talking about the interest rates and everything here, okay? And we're going into 60 seconds into this close. Where's my stop loss on this trade? It's just below this green zone, right over here. Around 36.22, 36.23. Right below this green zone, below this daily point of interest yellow line. Just below here. Okay, so we got now 24 seconds to go in the close, like the basketball game, the shot clock here. So again, guys, heads up. If this bearish volume closes below this green zone, I'm going to have to just go through my rules and invert it red, show that sellers are showing the strength. It did close below there. Then it could definitely come back down into this deeper green box and possibly stop me out. However, if the volume closes blue back in here, I'm going to still keep it green. See, it closed right at there. Like, see, this is where you got to, you know, really look at it. So it did close below technically. So it is a green to red. Now, sellers have the upper hand. Okay, so you see how it just traded right back into it. Sellers are pushing it down. But we do have a wick, a wick, a wick, and a wick. So can they return it back into here? But now we're trading basically against the trend, right? So it's red now. So the buyers now have to start really asking to trade back up here and close with some blue volume above, you know, or at least make some highs, you know, to continue to come in here, because sellers have the upper hand. They closed it below that zone. So right now buyers are showing a little bit of strength. But again, it could just come up and then they reject it right back down. So buyers got to start asking to trade at this upper half above here, okay? In order to continue to build this. Because a lot of sellers are here and they're offering and they're pushing the price down. So myself as a pending buyer that got executed, you know, I just got to continue to watch higher low, higher low, higher low. We're still above this depth of market. So it's engulfing right now, but still a lot of time left on this candle, 3 minutes and 40 seconds. So can we at least get it to maybe push for a new high, ultimately close above the red box? Then I can flip it green again, and maybe we could have that leg pushing back up, redistributing this buying volume. However, these sellers are strong. They're still up here. I'm back to break even now, you know, like, so the trade is gone. In drawdown, 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 came back up to a tiny bit of profit here, but that's not why I held this trade in that drawdown. It's to teach you guys how this zone operates here. Okay, so that's a great bullish candle. Okay, it made a new high above there and then got rejected back down right at the, so now sellers are still here pushing it down. Where will this body close now? Will we engulf this bar? Will we close above here in order to continue to break out? But it's still trading relative to this zone, okay? Okay, so it's continuing to fill up now, okay? But we're right back to the high of the candle, so continue to push. Okay, if it gets up to that red line, that's representing 50% of that bearish candle. Okay, so that's the ongoing larger resistance above us. It would be fantastic if the buyers can push it and ask and close above that red line, because then we've engulfed all of this. We've recovered our zone. Buyers now own the zone. It's still bullish. If we can close above there, maybe we could make this red line into support to continue to drive back up, right? So still maintaining. It just came a little deeper. It didn't activate this one down in here, but this one is still holding up pretty good. Now we're going into a minute and 45 going into the close. So that's a good return, but it hasn't closed yet. So it's in profit up to that red line, 30 plus pips, 30, 33, okay? So if you're a trader, you can start reducing your stop loss if you like. However, let's just continue watching this, okay? So that's approximately 30 plus pips in profit. You can start to reduce your risk if you like. However, I'm keeping everything how it is, and I just want to watch and see where this bar closes before I do anything, okay? Okay, so that's a good push. That's 40 pips up to that 42, 420 up to that wick. Let's see now the closing price in the next 1 minute. Okay, anything for me, if it moves up 50 pips, I normally go to break even. Okay, 40, 50 pips, break even. If you guys are learn how to do this, please. Rob, you're already out 80%. Not bad. I would do the same thing too if I wasn't educating on this one. But this was an educational trade here for everybody. But let's see what we're doing here. Let's follow the close. I can't stress the importance of the closure of this body, right? it would be so good if we can close above this red zone or above that red line. Look how they're pushing it back down. Okay, so here's the close. Technically did close above. Go red to green. We've kind of overtaken that zone momentarily. Okay, so now it came in here. Now we got a bullish candle. Can we continue to drive back up our wick? You know, and then continue to drive for approximately 50, 60 pips up there. Maybe target this point of interest right up here at 3637 up there, and continue to build with this, right? If it starts to break out of this high measured move and we get up to that point of interest, that trade is running 60 pips. Then that's where ultimately 40, 50, 60 pips, you go to a break even. You can even scale out if you like a little bit. But our ultimate goal is to reduce our risk and get it to break even. I could start to reduce my risk right now. It's going to maybe the bottom of all of these wicks right there. So I've reduced my risk from down there. I've reduced it by how many points? Remember I was down there. I've reduced my stop loss by over 45 pips. That's fantastic. Reducing risk. I still have a little bit of risk involved, but I've reduced it, okay? So I've gone through the worst. Now it's just managing, okay? So now we came back up. Are they the tweezer top highs? There's a little tiny high, okay? So we are maybe continuing to punch out of here. That's 44 pips. 50 would be right there, but let's see if we can get up to fill up to the entire body, right? And then also if we're continuing, we want to get bullish closing volume above this red line so we can invert this point of interest, 50% of this bearish candle, into a bullish candle and maybe build off of this. Where this red line is resistance here, we can turn it into momentarily support to continue to push right back up, okay? But please, guys, manage your trade accordingly, okay? I'm here for education, entertainment. But if you guys are managing your account, please, guys, learn proper risk, okay? Also, scaling out methods. Learn for yourself what's best for you. You know, you guys don't always need me to tell you what to do. We're all adults here. Please do what you got to do here. Okay, we have 2.5 more minutes to go on the close of this candle. Okay, it is making those higher lows, higher lows. We got a higher high, higher low, higher high, but still it is trending down from here. So a big seller could come in and just drop this thing right back down, right? Captain Boom, daily goal in the bag, runner left making the weekend beer money. Perfect, perfect. What are you drinking? Stella, Heineken, Beck's. What are you drinking? I'm making my Gatorade money. Okay, guys, so 2 more minutes. I can't stress enough how important it is, this red line. Who will retain this position? Boom, it depends how much further it goes. Maybe if it comes up here, maybe we're getting into the rum and the cognac up here. Ryan, what strain do you smoke for focus and trading? I like a high sativa, about 30 to 34% sativa is what I smoke. There's a really nice one by Cuban Links. It's for mental focus. Will not put you to sleep or anything like that. But that's basically what I smoke when I'm trading. We'll have strain reviews too on this channel. Okay, guys, that's 50 pips right there. So I am going to a break even now, up 50 pips. I'm at a break even now, okay? So up 50 pips, BE, break even, absolutely no more risk. There was a little bit of drawdown, but it came back up. I trusted the zones. I went with the, the point of controls. So up 50 pips. This candle's closing in 40 seconds now. I'm still holding it. I haven't taken out anything, but let's see how high we can move with this. Maybe I'm getting a little greedy, not taking out anything, but ultimately, if I have zero risk involved, I'm okay at the end of the day. Okay, so that's about 55 pips. Remember right up there to the top of those bodies, that could be, look at it, 618, 61.8 pips right up there, 618. Take partial, Sherry. Okay, I'm going to listen to you. Sherry is my angel looking out for me. I'm going to take out 80%, Sherry. I'm listening to you. So guys, I just took out 80% and leaving 20% break even because Sherry told me to, and I listened to Sherry. Okay, so I took out 80% up there. You know, I'm happy with it. We learned, we earned together. Okay, that's the point of this call, guys, is to learn and earn, right? It's not to get greedy on these calls. But I have 20% running. So I hope, you know, it could drive up to that yellow tape, okay? But I have 20% at break even to allow, you know, for those emotions, to allow that to go up there, right? But the nice point of the trade was to take 50, 60 pips out at 80%, pocket it, and that's a W, right? That's a win. That was showcasing how to use, that was a pending order, right? If I didn't use a pending order, I could have got maybe in a little bit deeper down in here. Ultimately, I could have waited for it to close above, bought this, breakout right there. But that first one that came bearish, triggered right in there, it just went right back up 50 pips. So that was a good one right there. But you know, you notice if you didn't do anything, it came deeper back down. So guys, do you guys see now how that block held? Yes, there was impulse, but the volume accumulated and buyers are bringing it right back up. Okay, so guys, hit the likes in YouTube, please. We have 850 viewers. You know, it's sad if we only have 300 likes after this long session. You know, with the education live, showcasing a pending order. Normally I'm doing market executions, but we got 500 likes. Perfect, guys. Thank you guys so much. That's perfect. 519, that's my area code. Thank you, 519 likes. That's perfect. That's a sign right there. Those, I believe in spiritual numbers. I believe in those things. You know, I always see the same numbers over and over. I always see 420. I always see the same numbers, 618, 382, same numbers over and over and over and over. It's like, you know, our angels are telling us something with these spiritual numbers. You know, psychological numbers all day. That's what I trade. I trade numbers, guys. You know, so get to know your numbers. Get to know your psychological numbers in the markets, okay? And you guys see right up there, it did come right up to that body to that 6.18, and you know, that's where normally I was looking to take out 80%, but it's all good, you know. So it came right there, point of interest, body. Could it go higher? It could, but also sellers could come in lower high and push this thing right back down. Okay, guys, it's 9:12, so I apologize, but we got to get doing NASDAQ right now real quick. So if you guys are managing this trade, please manage it appropriately. Hit the W's in the chat if you guys learned, you know, you guys got something. But I'm moving, okay? So just so you guys know, I do have 20% hard stop at break even, regardless what happens, but I took out 80%. So thank you, Sherry, for reminding me. I appreciate you. Guys, now I'm gonna move over. We did US 30, okay? So just reminder, we did US 30 over here. Let me get to US 30. So US 30, we did the analysis. Okay, we saw. I'll come back and we'll analyze the news. But we'll come back, get ready for Wall Street on this. Let's do a quick top down on NASDAQ because I know maybe some of you guys need a break. Got to go to the washroom. It's been a long, 3.5 hours so far. We haven't moved. So if you guys need to shake the legs a little bit, do some jumping jacks, go for a drink, go to the washroom. I'm just going to do about 5 minutes of analysis here on NASDAQ top down and get us ready for Wall Street. Okay, guys? So thank you guys so much. Let's get now NASDAQ right over here. So again, I'm going to start off on the daily. Right there. So again, what I'm doing, it's the same thing I'm doing every single day, guys. If you join us every single day, you guys know exactly what I'm doing. There was that previous double top all-time high supply. Again, I know these dates because I do them every single day. Same with you guys. This was December 2024. This was February of 2025. That's when we dropped. We had a lot of stuff going on with Trump, tariffs, Liberation Day, all in here, kind of recovered. Tariffs kind of got delayed, taken off. The market rallied, and it came back up to this all-time high. And look, now we physically have closed mid-June above here. June was some good trading. June, July, and August. Normal summer months June, July, and August are really dry volume in the markets. This year was exceptional. I'm telling you, I haven't seen such a good trading summer in June, July, and August in years, what we had this year. So some of us got blessed this year. You know, it was a great trading month. Some of you guys accumulated a lot of profits during these summer months when normally it is slower moving. So it was good. We can't fault the June volume. It was pretty good. Now let's look. Like you can see, it's making a higher high, came back down, higher low. New all-time high, back down, higher low, come back up. Again, look at today. We're testing these all-time highs, could potentially break out today. So pivot points now, just some local pivot points right up there, yellow line. Why? It came up and you physically see it stop right there and it pushed down. So when it pushed down, did it come back down to the green box? No, they made a higher low. Pivot point, stopped right there, came back up. Now let's record our all-time high, okay? So let's see. This was the previous all-time high. Again, orange line, all-time high right there. It was August 13, and look at yesterday, okay? Let's zoom in. Yesterday, we broke out of it, okay? So yesterday was the new all-time high. 24,007, James Bond, okay? Now, you see, from the all-time high, I can lower a red zone, okay, to these bodies where I normally do this, okay? So what I had in the previous was that all-time high to those bodies, and I made that zone red, and I stretched it into the future, okay? And then wick, wick, body, body. So now we see today's daily candle, CPI news, we're trading in still this all-time high supply zone. I don't want to, just go right up to yesterday. I want to keep it consistent with how we had it and just acknowledge yesterday broke out of here, okay? So stretch this in the zone. Same, look at now. We opened ignited bullish and we're driving in this, but this is still an all-time high supply zone until we get a body closing above here. Maybe today, maybe tomorrow. Who knows, okay? But we got to watch this right now, okay? So I can continue to dissect all of this down here, but I don't think NASDAQ is going to drop all the way down here. So it's pointless to do all this right now. But just real quickly, there's another point of interest right there. Again, pull back body to body. It came up, stopped right there. Then you got wick, 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 wick. So that's a zone. And you can see right there, there's the body. Guys, look how easy you can do this, okay? Right there, capture that volume. So, remember what I said. I'm going to tattoo this on my forehead for you guys. It takes two bodies to identify a zone. Two bodies, that's it. Some traders think it takes multiple 20 bodies to figure out a zone. No, it doesn't. It takes two bodies. You just got to know exactly what you're looking for. I'm going to tattoo that on my head after this call for you guys tomorrow, okay? It takes sometimes two bodies right there. Where it's barcoding. It came down bearish, bullish, bearish, stopped right there. Pivot, came back up. So there it stopped. Look at now when you stretch it into the future, you see the wick came in there, back up, came in there, back up, came in there, back up. And look at closing up. Came in one more time, right in there. So this is now a demand zone. You know when we draw the big fish in there? There they are. They're swimming around in here. There they are. There they are. They're probably in there still waiting to get filled. Just like how we did on the gold buy. You see that fish? Where's the fish? Here's the fish. Okay? It happened, but now, you see, if you don't do anything, look at how the market dumps down. So we did not break above that body to body. It's a lower high and they're dropping it. So that's unfortunate what happens. Things don't go up forever, guys, okay? So just letting you guys know about that. That's why I'm thankful to Sherry, my guardian angel, telling me take out 80% and go to a break even. Now that 20% got hit at break even, but I still took out 80%. That's why it's not good to get greedy in the markets, guys, because what goes up can come down 2 times fast. What goes down, if you're in a sell, can go up 2 times faster, okay? So that's how markets move. Just have a realistic daily goal, get your daily goal and get out of these markets, okay? Look at now, we got a nice double bottom on the daily. So it came down, green zone, our neckline, came back down, big wick in the green zone. You can consider that the double bottom. We came up, there's a body that closed above, and now we're continuing to drive to that all-time high. Are we going to do this and then it comes back down? Or are we breaking, closing, flipping this red zone green, and maybe next week again driving into FOMC? Wow, look at how they are engineering these moves right now. Now look at today. Let's follow yesterday's candle, okay? We opened. It was initially bullish on the PPI news. All-time high, 24,007. It dropped all the way back down. Low of the day still at, look, points of interest. Draw a yellow line right there. Get in. I did this on the 5 minutes. Why are we not doing this on the daily, right? There is close, open, rejection, coming back up. Now we closed right there. Now let's see, how did we open? Look at today. It's basically a bullish ignited open, okay? So that's our purple lowest point of the day. You can see how strong it is, 23,830. And we're continuing to push, bullish, bullish. We took out this wick on Tuesday. Have a yellow line here just in case we retrace back down. This was previous resistance in the market. It could be support today. We could be buying off of this later today. Okay, where is it? It's 23,885. Okay, we still have bullish volume going up, going up. We already made a highest point of the day so far leading into Wall Street. There's our highest point of the day. It is lower than yesterday's all-time high, and we're still in this red zone. It's getting rejected. So you see that yellow line? I swear, guys, it's representing 50% of the current volume, right? Grab your Fibonacci, open. Where's the current volume? I know it's moving, but look at right there. 0.5 is, I can lower this yellow line right now and adjust it right to 0.5. 23,880, I had it at 886. That's 6 points basically, okay, like a spread, okay, but that's, if it comes all the way down there, that could hold and continue to go back up. If we lose this yellow line today, then sellers could be in control and continue to offer to these opening buyers and reverse the candle. Okay, so right now it's still strong, very strong. We're approaching that daily high. Now let's go into the 4 hour, guys. I got to go quicker because it's 9:20. So we see right here, this was Wednesday. End of the day, it came back up, closed. We open here. This is futures market 4 hour candles. This is opening 6 p.m. to 10 p.m. Closed strong, came back down, held higher low, higher low. Here's Europe, 2 to 6 a.m. We came up. Now here's the 4 hour candle that closed, open, came down, came down. It was initially bearish during pre-New York, but we picked up right near the above the lowest point of the day, came back up. We've flipped now the candle. We broke out. Okay, so for hourly traders, have a white line maybe at London's high. Make it white. That could be our support going forward. 23,918, and ironically, it is 50% of the current volume right now, trading, which is going to close in 38 minutes. So this could turn into our hourly support, right? We're testing the highest point of the day on this 4 hour candle. Could come back up, close above here, and continue driving, right? Strong. Still have strong, good pickup on liquidity. And now let's go into the 1 hour. So there it is. There was the liquidity grab during the news. CPI, it came bearish, 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 bearish. They took out the lows, but they did not take out the lowest point of the day, so they protected it. So it's coming right back up, right back up, right back up. It hit the highest point of the day, so it was all news. And then we closed, and now we just came back down. Now see the white line coming from Europe, where it's holding as hourly support. Now we're just consolidating until U.S. market, Wall Street opens up in the next 7 minutes, okay? So if we're looking now on the hourly, you know, it came up, strong move. There's the neckline, purple line, coming right back up. It could do what the 5-minute candles just did on gold. See that lower high? And then now in New York, it could come all the way back down and maybe fill that news wick and start coming back down to the lowest point of the day and drop, okay? So keep that in mind for today. You know, exactly like how we were just in that gold buy on the 5 minutes right here. You know where it came up right here, the second leg up, it made that lower high and then they just dumped it down. That could literally happen on NASDAQ on today. Like look here, it came up, there's the big top neckline. See how it's coming up? This is the lower high right now, just like that. And they could drop this thing right back down. However, if these buyers close it strong above here, could retest this and they could continue to squeeze those sellers to the all-time high, okay? So it's going to be a crazy Wall Street market open as well. So if we go into the 5 minutes now real quick, everything, look at how it's just consolidating just before the news, then they dropped the CPI. It was initially bullish, came all the way up, hit the highest point of the day, they dropped it all the way. Notice how they didn't take out the lowest point of the day, came up, closed, and since then, 835, 840, 845, 850, 855, 9 a.m., holding, coming back, retesting, holding this white line, maybe to come up. So this white line, if we get, you know, if you want to go in the 1 minute and you get closing volume, retest it, it could drop right back down to that yellow line, back down into here. Right now, I can see what they're doing. They're doing like an M top. It came up, back down. There's my white line. It came back up. They just pinned that candle now. And there's the second leg, could come down. Break. It could be an impulse and pattern break. However, if you're patient, disciplined, you got to wait for some volume close below there. Might retest this. Then you get your sell, right?
but it's still holding. Okay, we got buyers, so it's consolidating, guys. But that's just what to watch for. Okay, so at our daily bar indicator, here it is. Just to know, it opened very strong, pushed all the way up during with the new, even that pullback, you know, it came right back up. So it's still strong, and we're trading right here. Okay, so keep in mind how the daily candle is going. And let's add EMA 9. We're right above the EMA 9. EMA 200 is right here. Okay, so let's put these two side by side and catch our breath. Okay, so there's NASDAQ to the right side. US 30, very similar. Okay, news popped it out, liquidated the highest point, came all the way back down, right down here, and coming right back up and, you know, consolidating in this range. Okay. So I'm going to continue to make this a green zone right now, okay? Because we got volume in it, above it, creating highs. So I'm going to make this red zone green to represent that there is still buyers here, okay? Okay, are we all good here? We're about, what, 5 minutes away from market open. Okay, so just let's go to signals. Guys, at 9 a.m. while I was doing that, you know, there was a sell signal come out at just below 36.30, 36.29. So on that push down right here, 36.30, below that white line right there, break and dropping, came retested, pushed down. We might get a 3-leg bar coming back down, okay? So, you know, we caught the buys on that pending order, and signals are catching the sell on the sell side, okay? So, you know, that's how you can utilize signals, trade ideas to help you out in your trading. But guys, I'm going to go off of gold for Wall Street market open, and we're going to watch US 30, Dow Jones, NASDAQ. I'm just going to look in the pre-market at some specific names. So remember, Oracle had that massive move yesterday. They were up 36%. They're up 1.64% in the pre-market. Just some notable names. Eris Mining, for those that watched that blog a month ago, it's trading at $13.32 up. It was up 2.3% yesterday. So gold being at all-time highs. You got to check those gold mining companies: Eldorado Gold, Eris Gold, Silver Mining Corp. Alibaba is on a tear. It's on a tear. It's again up 3% in the pre-market. Unbelievable. Micron, wow, Micron is up almost 6% in the pre-market today, and it was up 3.5 yesterday. So Micron is up 10% in 2 days right now. Unbelievable. Micron is tech, chips, probably running on coattails of Oracle. Nvidia is a monster, trading at all-time highs. So everything looks pretty green. Amazon is up 1%, Tesla is up 1%, Apple 0.3%. SoFi up 1%, Palantir 0.6%, SMCI, Supermicro Computer, up 1.2%. So we do have some Adobe up 1.6%. GameStop is down a little bit in the pre-market. You know, you got to be careful with those pump and dump securities. Okay, so that's what we got going on. Pre-market looks good in Wall Street. So we'll see if markets open up, draw down, grab liquidity, go back up, or will they just pump it out? Okay, if you're walling tech, again, more US 30 is Dow Jones Industrials. So it's got a lot of manufacturing, you know, it's got a lot going on in here. So this is more related to CPI and PPI data because it represents entire sectors, not just basically tech securities. So a lot going on over here, okay? And then have some rules, guys. We're 90 seconds to go into the open. Again, real quick, guys, double check your lot sizing. I'm gonna remind you guys, I was just trading gold, so now I'm looking at my US 30 and NASDAQ. I gotta switch my sizing because it's a different security. Rules, are you guys trading right at open, watching 1 minute candles? Are you gonna wait for a 5 minute candle close, 15 minute candle close? all of these things. Start running through your plan right now. And this is the time to decide, not during the market open when it's hectic and crazy. It's now. Develop your plan. You should always have this set up every single day so you're not deviating from it. I know what my plan is every single day. I can do this with one eye open because I do the same thing over and over and over every day, okay? So news, do we have anything? Just a real quick recap. We went through all of today's big news, but now Wall Street is opening. All we have later today is natural gas storage at 10:30, but also we have the 30-year bond auction, okay, at just after 1 p.m. So we had the 10-year yesterday. Today's the 30-year, okay? Now, look at bullish ignited NASDAQ candle. Again, trading at the highest point of the day, could break out with 25 seconds, okay? So good luck to everyone. Trade with proper risk management. Again, if you made a little bit of pips on gold, if you got that sell with the signal, you know, if you're close to daily goals or you've done good, how much are you going to allocate now to Wall Street? Do you want to just double down and give it? Some traders do that, or do you want to preserve some profits and trade accordingly? Here we go, guys. Here's market open. Okay, so closed above bullish ignited short wick pop on NASDAQ. Okay, well, how high will it pop? To the top of the red box. Got rejected real quick. So even if there's a quick little pullback into 50% of that bullish candle, it's right there. Okay, even US30 open bearish right down to that white hourly line, came back up, tested inside here. Will it continue to sell back down? Okay, otherwise it's just, again, accumulating in this green zone. Maybe we wait for bars to close. Okay, so we got a nice bullish hammer on US30, but again, it could come up, go back down. But this is, remember, this is Wall Street volume, so it has a tendency to break for new highs. Micron is up 6%, up to $148. Holy shit, okay? So markets are strong, okay? Bullish. Careful. Careful trying to sell these things. Very bullish out of the gate, okay? You know, like if you go to a horse race and you watch your thoroughbreds, you know, when they come right out of the gate, they're charging. That's what Wall Street is doing right now. Right out of the gate, it's moving bullish. So NASDAQ now got pinned right up there. High of 23,973. I would go 975, you know, that psychological number. So they pinned it so far. Let's see if they actually pinned it there and hold it down. Okay, it came down, but now it's got that bullish volume. So let's watch these things, okay? Guys, I apologize if I haven't looked at the chat too much and answered any of your guys' questions, but markets are fast. You know, it's kind of, I'm multitasking here, so it is a little busy on my side. But if I didn't answer your questions, don't take it as disrespect. I just haven't seen the chat, guys. This goes for you guys in Zoom and YouTube. I'm trying to look at everything here, guys. I have multiple monitors too, where I'm looking at different things. So it's a lot to focus on. And I didn't smoke I didn't have a break. So, man, so let's just see here. Let's be patient, okay? 2.5 more minutes. NASDAQ is beautiful coming out of the gates. Okay, we're not too far from that all-time high. There it is, 24,007, that orange line, right? Is anyone in a trade prior to Wall Street market opening up on Dow or NASDAQ? Not regarding gold, regarding these two securities. Anyone in a trade prior to the market, or are we waiting? Okay, so again, look, they're holding that high. They pinned it back down. Okay, so it's a bearish pin bar. Let's see where the volume will actually close in the next 1 minute 40. So still buyers and sellers are fighting it up here. Good job, Boom. You caught some pips on Discord sell down for the day. Perfect. him, you're waiting 15 minutes. I like that plan. I like that. I have a lot of respect for 15-minute traders. Like, I'm a 5-minute, 1-minute trader, but I have the utmost respect for 15-minute traders. Waiting for that full 15-minute, like watching this full 15-minute body close. You know, I have a lot of respect for you guys. You guys are very patient, very disciplined. You're not like us scalpers. I have a lot of respect for 15-minute and 30-minute traders, more so the intraday traders. Okay, look at that. Okay, remember how many times NASDAQ came back down, filled, look, it filled right back up again. So it didn't break that red line. So it's basically like a tweezer top in its own candle. Okay, but let's watch the close. Okay, again, look how many times they pushed it down. Okay, so next bar could turn bearish, right? I'm noticing how many times it comes up there strong, they push it back down. Coming back up strong, they push it back down. A third time it came up there strong and they pushed it back down. So is that signaling anything? It's signaling that there's a lot of sellers there, but this bullish bar is showing me there's still bullish volume. So I got to keep that in mind. Excuse me. 10 seconds to go into the close. And we still are closing with US 30 above this green zone holding. So if we're looking to buy, we can buy pullbacks. This is an ignited open candle. It could continue just to rally up, fill that wick and drive for a new high, or it could get rejected right now like a lower high and push down. Okay, so right now it's still holding its ignited open. Okay, but hasn't really broke it yet. Okay, so it came up, still lower high, pushing back down. Is it refueling itself? Okay, by holding its ignited open. Okay, so it broke the wick. Now I'm just waiting for like a technical pullback to come back down. Maybe it wants to try and refuel itself. Remember, I missed out on that gold trade for that quick little scalp for 40 pips where I waited and I waited and I waited. Is this going to do the same thing to me as well? But right now, sometimes when it gets away from me, I don't want to chase it. Okay. Now NASDAQ, okay, so you can see got rejected again. So the sellers are here. Remember how many times they got rejected at this 973 wick? 3 times, 4 times in that candle. Now you got a bearish bar closing coming down. So we just need closing volume to let us know that sellers are here, they're present, and can close it with conviction. Because right now when it comes down, it picks up higher low wick. Buyers are still there, okay? And I know it sounds crazy, but I could be waiting for a pullback buy to buy here, 45,600 on US 30, and take it back up. I know it might not happen on this call with us right now, but it might happen later today. So it's good to notice. See there, guys, how the return is the sellers now. So, you know, when you pick up on wick analysis, okay, I know I didn't take the trade. So someone's going to say, Ron, well, you didn't take the trade, so this doesn't mean shit. No, it does. Do you remember how many times it said it came up here and went back down? Came up, went back down. Came up, went back down. I follow these things, okay? And then that's when it opened and bearish. I didn't want to take an impulse trade, okay? Because I'm trying to teach you guys to wait for 5-minute bodies to close. But as a 1-minute trader, I pick up on those things. And that's where, you know, you see it rejected, rejected, rejected. And then it comes back down right there. Sometimes that right there, that break of that candle, I'm in just for that 1 minute, collect 20, 30 pips, and I'm out and close it. Not even look back because I know it could be coming right there to the white line and coming right back up. So, you know, you got to be quick with those things. You see, even that 5-minute candle, see how it came bearish, bearish, bearish? Again, right down to that white line. So if you got to sell, you know, at these locations, it's nice to do something, okay? I can't stress the importance of that. I know it doesn't seem like anything if I don't take the trade. I understand that, but not everyone is here just for buy-sell signal. Some of you guys are here to learn how to do this on your own, and I'm trying to teach you guys the importance of that triple top wick where it did not break that red line. And that's how you can see that the sellers held, and now they're redistributing to the downside. You see with US 30, it hasn't broke yet. Still holding its ignited open, still making highs, traveling up back above here. Daniel, cheers from London, Ontario. Daniel, what's up, bro? When you going to come over again? Are you in Colombia right now, or are you here in London? Guys, if we could all give a shout out to Daniel Perez on YouTube. He's a great trader, great trader. You're in London? Message me, man. Message me later on. Emirates, welcome. Good morning, bro. Okay, so we got one more minute. Look at, we lost our bullish move. Okay, so maybe we'll sell off on US 30. Let's see if it will lose its ignited open. Get ready. This might be also like one of those impulse moves that come down into the green zone. So if I'm looking to entertain a sell, if it comes right in there, it could be a 50, 55, 60 pip move, but it could come down there and return right back up. NASDAQ is pushing down, so it might actually officially close below this white line. Then that's where we want to figure out the point of control of that candle, okay? Here we go, guys. Now the markets are really opening up, going into 9:45, okay? Here we go. 30 more seconds. See how we broke now that hourly 4-hour white line? Now it's going down. So I've already moved my cut line to 50%. But what we could also do is find the point of control of this big bearish candle. As soon as it closes in 15 seconds. You see how I have my fib tool ready for the closing volume? As soon as it closes, I want to be ready. But also watch US 30, guys. I'm trying to do everything here, but the markets are moving fast, okay? So there's the close, okay? So you see 50% right at that red line. So it matches up perfectly with my cut line where I placed it. And then just go to 382618 right there. There's the red box. So if you're looking to sell a pullback, you know, sell at a premium level, maybe selling of that point of control of that candle, maybe in there, okay? But maybe it doesn't come in there right now. Maybe it's getting rejected and ready to continue to drop down, okay? So now it's got a bullish candle. Let's see, will it come all the way and retest in there? Wow, US 30 is still bullish, ignited, breaking. Oh my goodness. Whew. Is US 30 going to kiss that all-time high right there? 44,776. NASDAQ got rejected, okay, at that white line. It could turn into a shooting star candle and start to push down. Steve, only thing good out of Ontario is your knowledge. No, we got some good things going on in Ontario. Come on. We got good fishing. We got a lot of Great Lakes. Okay, I'm going to sell NASDAQ. I like that shooting star candle. I'm going to place my stop loss above the purple line. Normally I would place it right above that red zone, but I got tapped out yesterday. So I'm going to just place it a little up there. I'm looking for it to return back down to maybe the yellow line, maybe back down to clear this entire red zone. Okay, so this might be my last trade of this session. I'm attempting a sell here, okay, on NASDAQ. Okay. I saw it retest the white line, get rejected, took the sell. It did push down for the lower low. Now I just need the volume to start, you know, pushing down. Getting to that 200 EMA, might catch a wick there, but let's see if we can break that and drop a little bit further down. Maybe also follow this volume, get some closing volume below here. And if it does return back up, that's why I'm giving it some room to breathe. That red block is still up there. Okay, and then we're going to see if we can catch some pips coming down. Okay, to right there, that's about 15 pips. Yellow line, 25, 27 down in there. That's when I'll start to reduce my risk at the yellow line, you know, for a quick little scalp, right? It's coming down 20 pips now. And don't forget, we got a 15-minute candle coming up in 2.5 minutes, okay? So if you look at the 15-minute candle for the 15-minute traders, that's why I want to see if there's enough volume to come down, test that daily point of interest down in there with this 15-minute volume, okay? Share Canada pays a lot of taxes. Yes, we do, especially Ontario. You know, they tax us 50%. 35% is your marginal tax rate, and then whenever we go buy stuff, tack on another 13% HST. It's about 50%. For every dollar we make, 50 cents is gone. And then when you invest that 50 cents, again, on any capital gains, you got to pay earned income interest on that too. So it's very tough over here where we live. Okay, so it's going to close in 90 seconds. I'd like to see, you know, gauging off of this 200 EMA, can the volume close below there? So it dropped. I didn't do anything, right? It dropped almost 20 pips. Haven't done anything yet. Haven't reduced my stop loss yet. So got to wait for this body to close. Okay, it's coming back down. So, you know, buyers and sellers are offering. Closing price will be the deciding factor. Can it close below this 200, close near the low, one more push down, and then we have a new 15-minute candle opening in the market, okay? Ultimately, I'd like to see this bearish black volume close below that previous low wick in order to continue to push down with the volume, okay? So the last 30 seconds. Now, this is where things get really interesting. Rob, congrats, man. Nice. I love it. Good profit. Well done. Okay, here we go, guys. 20 seconds to go into the close. Okay, it's trading near the lowest point. Are we going to push for a new low? Will it close near the low below that 200 EMA? Will we get maybe a 15-minute bearish ignited candle drop down with this? Oh, man. So here comes the close. 5 more seconds to go. Follow the close. Okay, close, bearish ignited. Are we going to get that quick push down? No, kind of flip the wick. Okay, so now can we push, break that 200 and get down to that low wick again? So it's holding. You know that 200 EMA indicator? Some of you guys are using it. You can use it as a support indicator or a resistance indicator. Still holding. So now we're coming back up. So into 50% of that bearish candle volume is right there, right? If I just use my cut it in half right there. There's the cut. So can it keep this thing pushing down, or ultimately is it going to come all the way back up and test that white line? Okay, so the white line is also a determined zone now in the market. You know, right there, you got that white line zone. Okay, so we got nice rejection. We got our shooting star candle. Now we just got to continue to target 23,889 and bid down to trade down to our yellow line, and then we can collect approximately 25-30 pips, and then that's when we can reduce our risk. Sorry guys, I'm talking really fast. I hope you guys are just following with me what's going on in the market. So we did make that lower low. Okay, so we got lower highs, we got a new lower low. We just need that volume to cooperate with us. So when we take that new low, buyers are now asking to trade back up. So again, we got to rely on our zones above us in order to continue to push down. Okay, so it takes time to develop. Again, on that push down, I didn't reduce my risk. I didn't take anything out. So maybe it will come now back up for its return. Killam, thanks for your help today. I'm up 1K euros on gold trades. Excellent. Wow. That's excellent. Good for you, man. Now take the day off, Killam. Get out of these markets. You're done, bro. That's it. Don't continue trading. Okay, so this is the ultimate retest now. This was the big bearish candle that came down at 935, okay? So that's the big point of control. If we do not find a wick inside here, then it's telling me NASDAQ can be really bullish again today and continuing to drive for all-time highs. So if I'm going to continue to trade later this afternoon, I'm making a mental note in my head right now. If the sellers are not here in this point of control to push this volume down, this could be a strong move on NASDAQ today. Okay, and that bullish candle could continue to be very bullish today. Okay, so we did get an initial rejection there. Now, can we continue to maybe push below this zone, get it below that white line, and then start that next leg? But every time we're coming down here to this zone, the buyers are there, you know, pushing it right back up. So we'll see how this thing moves for the rest of the day. But this is an important point of control right here. Okay, so again, if it comes through here, I'm getting stopped out. Okay, I don't want to be part of an all-time high push. Sorry, I don't want to be part of that. I'll accept my loss and walk out of these markets with my head held high. So now it's trading back in here for a second time. Can they continue to offer and push this thing down? Or are these buyers continuing to ask to trade near the highest point of day and take this out? US 30 is on a tear right up to the all-time high, okay? I'll verbally let you guys know as soon as I get tapped out. I'm still holding this, but I'll let you guys know. Wow, US 30. Dow Jones hitting that ignited bar. Oh, man. Beautiful move on US 30. Okay, so 30 more seconds to go into the close. If this closes up here, I might as well just close this trade prior to it hitting the stop loss because the buyers are proving their strength. Maybe I see Dow hitting the all-time high, So again, guys, I might exit this early just right now. I'm just going to watch the close of this candle unless the sellers can continue to push this thing down, what I'm looking for, and get it below this red zone. Okay, 10 more seconds to go in the close. We got a little bit of a wick that transacted right through the entire red zone, pushing back down, okay? So sellers are here, okay? But this bar opened ignited bullish, so it wants to continue to come back in here. So let's see if the sellers can reject this thing early. Goldman Sachs reached an all-time high at $782. Goldman Sachs, that trades with Dow. Financials are with Dow Jones. Goldman Sachs, JP Morgan, Bank of America. U.S. financials banks are doing fantastic. BlackRock hit all-time highs the other day. Okay, so I'm still in this NASDAQ sell. It is still technically below that point of control. This is the big important point of control, what I was saying earlier, this one, okay? So now we got a bearish candle coming back down to test this white line, the static line. Right there, it was holding support, 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 support. We made it into resistance, and now we're coming back down. It's support again. So it's coming back up with the buyers transacting back in this block. That's why now the big fight is in this block between the buyers and sellers. Who will retain this point of control? Buyers up here, then I'm out of this trade. I don't even want to be part of this to watch my stop loss get hit. Try it up here. If the sellers can hold this down, maybe they can push it back down, close it below this, make this the resistance again, then we can trickle back down into this sell location. Okay, so you can see this is where the battle is. New all-time high on US 30. Wow. Congrats to the US 30 longs. It's a big move up there. So new charted territory, go with your psychological numbers, okay? We just hit 45,800, depending on what you do, how you trade, 825, 850, 900. Okay, I'm gonna mentally tell you guys, like, I don't want to be maybe in this NASDAQ trade, so I'm watching. Guys, I'll let you guys know if I close this trade out, prior to hitting the stop loss. I see their tweezer top highs. Okay. Still holding those tweezer top highs. Still has some selling pressure. It's pushing the wick down. But man, strong buying volume behind. Okay, we've flipped the candle now. Okay, so sellers flip the candle back down to the opening price. So those are equal highs on NASDAQ in that red zone. Keep that in mind, guys. Okay, keep that in mind. Whether you're buying or selling, okay? Those are important to know. Holy, US 30 is bullish ignited breaking out of there, okay? Oh, NASDAQ is killing me here. Why did I take this security? Ms. Jones is just teasing me over here, and I'm stuck in this garbage over here. I hate NASDAQ. Man, I hate this security so much. I don't know why I trade this shit. Okay, I'm closing it out. I'm fed up with this. I'm fed up with it. Oh, I hate doing this split screen with NASDAQ and US 30 because I normally just trade US 30. Man, and it looks so clean. I hate NASDAQ with a passion. I hate it with a passion. this is probably my most disliked security. I'm telling you guys the honest truth. I hate this thing. I hate the way how it trades. Oh man. Look at US30. Oh, Miss Jones. You see? She's upset with me that I cheated on her and I traded NASDAQ, and see how I got punished. Man. It happens, guys. That's why. Please pick your favorite security and trade it. I don't know why I continue to look at NASDAQ. I got to make rules now. I got to go back to my old school rules where I just trade US30. I'll chart and analyze NASDAQ for you guys, but I just hate this security. I'm being honest, guys. That's my true feelings. I detest this. I feel so much more comfortable trading US30. Man, it's a beautiful thing when it cooperates. Oh my God. Okay, so if this bar closes above, this big red zone, where did we get this big red zone from? If you go to the daily, this is a serious zone up here. Okay, so this could flip going into, right here. That's previous all-time high, the 45,775, down to these bodies. That wick rejected, wick. Today we have, look at, they're redistributing all of this bullish volume to new all-time high. If today's daily bar, I know it's 7 hours away, but if it closes above here, tomorrow when we're trading, we're going to flip this red zone green and maybe possibly buy pullbacks out of here and continue to go. Okay, so man, what can I say? US30 is bullish. NASDAQ is probably going to catch up and continue to go. But yeah, NASDAQ is not too far off from its all-time high too, that 24,007, okay? Guys, I need a break. I've been sitting in this chair for almost 4.5 hours. I just need to stretch my legs and just move a little bit, get the blood flowing. That's it for today's call. Dave is doing post New York with you guys on Zoom, and if you guys want to join the team, we'd love to have you guys. You got the Discord, Signals, Trade Ideas. Congrats to those that took this Signals, made some profits. If you want to join the Discord with all of us in here, you're welcome to. Join the website, guys. If you want to read up on the blog today about the CPI, yesterday's PPI news, you got the blogs available over here. Lots of education, the other live sessions, not just myself, but Big Dave taking over post New Yorks and things like that. And guys, I just want to say thank you guys to all of you guys that hit the subscribe button today. We got to 85,000. So thank you guys so much. This is huge for us. We do appreciate it. And all of you guys that hit the like on the channel, thank you guys. We have exactly 500 viewers on the call right now. So you see what I mean? These psychological numbers. It's those spiritual numbers, guys. So thank you guys so much. Have a good day today. I hope you guys learned a lot. We'll do the futures charts, but you know what we'll do is maybe we'll fix up the trading view to have the live data so there's no delay. And then we'll also look at NQ, we'll look at YM, we'll look at GC. We'll take a look at those in the future. Okay, guys? Have a great day, everyone. Enjoy your Thursday. And there is a 30-year bond auction at 1 p.m. today. And tomorrow morning, don't forget, guys, 6 a.m. Eastern, we'll kick off to end the week, guys. If you are looking to buy pullbacks on US30, again, just set some alerts in these zones. Wait for the volume maybe to pull back and get that discounted buy. Similar to what we did with gold with the pending order, right? Just wait patiently in there. Eventually, maybe it will come down in there and give you a nice fill, and you can continue to trade with the trend. Careful trading or careful selling currently, like that zone flipped. So it's like I could go in a buy on NASDAQ right now blind. I think it's going to break out for a new all-time high. See how it took out that, inverted the zone, retested, continue to go up. I have no doubt that NASDAQ will break this area and, trade near the all-time high, just like US30. Maybe it's a little bit delayed, but it will catch up. So if you are trading, look for buys. If you're trading US30, wait for pullback buys. Don't necessarily always buy just the highest point. Wait for a pullback. It hasn't pulled back. They've been single bars, ignited, popping and driving, okay? So guys, we will see you guys tomorrow. Have a great day. Thank you guys so much. I appreciate everyone's comments in Zoom and YouTube. I read them. after the calls, guys. So any input you have for us at SST, we do appreciate it. We can take constructive criticism. We're big boys here. Anything that you'd like to see in the future, or comments about education, about anything you want to see on these live calls or going into the future, you guys let us know, okay? We're here for you guys. Have a great day. God bless everyone. We'll see you guys tomorrow. Thank you, guys.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.